Good morning, ladies and gentlemen. I ask all of you here in the room to take a seat. Sincere apologies for this delay. It's the technical equipment, the beamer. Last night when we were here preparing, everything worked. Now, unfortunately, we will have the stage without the slides at the back, but in the first part of the event, actually, we don't need the slides so much because the speakers on the stage are the ones that we want to hear. So welcome. It's our third event, EU Finance Day, Financing Competitiveness, that we're organizing this year across the capitals of the European Union, and we are very pleased to be here in Copenhagen in the time of the Danish EU Presidency. With the event today, it's about discussing the competitiveness and also sustainability. It's about promoting our flagship InvestEU program, as well as announcing you and presenting the recent proposal that we had on the European Competitiveness Fund. Danish EU Presidency, I think even the slogan that it has, a strong Europe in a changing world, it's very timely. And the priorities of the presidency are focusing on security, competitiveness, and the green transition, even more timely for the event or embracing it today. My name is Ula Hudina-Kmetic. I work for the European Commission's Department for Internal Market, Industry, Entrepreneurship and SMEs, and I'll be your moderator today. Before we continue with the speakers whom I'll call to the stage, two technical details. We hope to have a very lively exchange with you, participants here in the room, but there is also an option for online participants because we have many more following us online, not just from Denmark, but also from the whole Nordics and across Europe. You'll be able to ask questions via Slido. It's #EUFD. Please use it for any pertinent questions that you might have during the day. And the second detail is that our event is recorded, and the recording will be available a couple of days after the event, and so will be all the presentations, especially those that you will see in the second part of the event. So after all this practical information, and really apologies again for being slightly late, it's my pleasure now to call the opening speakers. And of course, ladies first. And of course, we will start with the Danish EU Presidency. And I very much welcome Mrs. Tina Nielsen Hertz, Deputy Permanent Secretary of International Business Affairs at the Denmark's Ministry of Industry, Business and Financial Affairs, to take the first seat. And then I also call Mrs. Kerstin Jorna, our Director General at the European Commission, Director General for Internal Market, Industry, Entrepreneurship and SMEs. And of course, also Mrs. Merete Clausen, Deputy Chief Executive at the European Investment Fund, representing here in this opening part also the EIB Group. And it's my pleasure to have here also Mr. Stefan Wallin, his Deputy Head of the Commission Representation here in Denmark, representing the Head of Representation who cannot be here with us this morning. So please, dear speakers, now the floor is yours, and I'm sure there is no need for the slides at the back because you're the opening speaker. So please, Tina, if you can start. Thank you.
Thank you very much. So it's a pleasure to be here today. Nice to see everyone here in this beautiful location, and greetings to everyone following us online as well. I mean, you mentioned the slogan of the Danish presidency, in a changing world. And being here today is something that also builds on us trying to navigate this ever-changing world and building the competitiveness for Europe in these rather challenging times. And so a very big focus for the Danish presidency is exactly to mobilize the investments that is vital for us in Europe, to develop the technologies of tomorrow and allow our businesses to grow and compete at a global scale. And so this concerns both the general framework conditions in the EU single market, as well as access to finance. It also concerns an attractive business environment and an attractive environment for investments, for companies. And these companies represent Europe in general, and we have received a pledge in the Copenhagen pledge on the 1st of October, and so we're happy to see the commitment from companies also to invest in Europe. But the underlying premise for all the discussions in this regard is the single market, the cornerstone for the European Union's competitiveness. The single market stands as our greatest asset, enabling European businesses to trade seamlessly across borders and have as their home market one of the largest markets in the world. But if we want Europe to stay at the forefront globally, we must continuously seek ways to become more competitive. And that means strengthening the single market further, removing harmful barriers that hold us back, and proactively implementing the Commission's single market strategy without delay. The Commission's competitiveness compass contains many valuable insights, and we're eagerly awaiting the single market roadmap announced by President von der Leyen. And what we need now, from our perspective, is concrete actions and clear deadlines on simplification, on access to finance, and on shorter processing times for permits, as well as approvals for products coming into the market. And so action number 1 is simplifying the rules. If we are to remain relevant on the global stage, we must make it easier to do business in Europe. This requires, firstly, simplifying the current rules. Unfortunately, the Commission has already introduced essential initiatives such as the omnibus packages, a top priority during the Danish presidency, and I sincerely hope that the European Parliament will agree on the urgency of advancing these omnibus measures. But then again, simplifying existing rules does not mean abandoning our goals and ambitions. The green transition, marked also by the focus on sustainability here today, remains a foundation for our future competitiveness and not an obstacle. This is very important for the Danish presidency, and I also wanted to underline it today. But regulations should at the same time not be left in place without good reason. They must be coherent, necessary, and effective. And then secondly, we're also focusing on better regulation. It's not sustainable that we introduce burdens in the legislative cycle only to simplify them afterwards. We need to get it right to begin with. And impact assessments in the legislative procedure is key to achieving just this. And then thirdly, we need to make the rules easy to follow. We must embrace digitization, standardization, and automation in business reporting, because there are substantial administrative savings to be gained here for European enterprises and to free up resources for the innovation and the green transition that we need in Europe. And then action number 2 concerns easier access to both public and private financing in the EU, and in a way that creates long-term certainty for business. And when we do consider EU funding, we do also need to look critically at ourselves and ask questions such as, why must European companies submit over 260 pages of documentation just to apply for funding? Why is there a need for exhaustive requirements such as detailed communication plans or the CVs of every single project manager? As things stand, European funding opportunities are slow, uncertain, and fragmented. And we are also very keen to look into financial instruments that are different, and especially we attach a lot of importance to guarantees so that we can attract private investment into strategic technologies. And doing things differently in this way is exactly what we're seeking to do together with the Commission on the basis of the European Competitiveness Fund that is put forward. We are very keen to streamline the rules, streamline the procedures, and make things much easier for business. And so the European Competitiveness Fund is making all these right noises. We also have we are also committed to making sure that these ambitions are kept when we implement the fund. And then there's a dimension to integrating better our capital markets and shifting the considerable European savings into productive investments. The Letta and Draghi reports are both very clear on this. And the Savings and Investment Union is a key priority for the Danish presidency to strengthen competitiveness and mobilizing private capital in Europe. And we're also giving special attention to new initiatives, such as revising the securitization framework to help banks lend more, and the recommendations for European savings and investment accounts. And we're ready to start negotiations on other proposals from the Commission, including the new market infrastructure package expected late this year. And then the third action number 3, reducing the time to obtain permits and approvals in the European single market. We see an issue with this taking too long. 7 to 8 years in the EU to approve new biological alternatives, for example, to pesticides, where in the US you can do this in 2 to 3 years. Permitting procedures for green energy and biotechnology are also too lengthy and complex, and many projects are delayed or even abandoned altogether due to this uncertainty, and this increases the risk that we stifle European innovation and competitiveness. And so we are very interested in streamlining permitting procedures to securing a competitive European market. And we are looking forward to a comprehensive review, particularly with a focus on environmental legislation, and we would welcome a strong effort from the Commission to analyze the barriers within these regulations. And then these were my 3 main actions that are the focus of the Danish presidency. But to conclude, I want to again stress that we are very happy to see that European industry and businesses do want to invest in Europe. But right now, we are worried that this is too difficult. It's too difficult to do business here, and the return on investments is looking better elsewhere. This is what we need to solve for, because the appetite for investment is actually there. And so we are happy with the Copenhagen Pledge, where 28 leading companies committed to increasing their investments in Europe by 50%, provided that we can simplify our rules and improve conditions for business. So let's try and work together to deliver on this promise. This is our aim, to increase our competitiveness, our economy, and to improve our shared future and the future for business in Europe. Thank you.
First of all, good morning, everyone, and also to the people who follow us online and who've patiently waited until we get on stage. This is the premium presidency event of our Finance Days in Copenhagen, and I have to underline and everything you said, fully behind it. What I'd like to do is to zoom a bit more out, also on the why. And when I talk about the why, the first number I'd like to quote here is 18 trillion. That's our economy. 18 trillion, the US is 23 trillion. So, you know, we don't have to be completely afraid ourselves. What is happening today is that of the demand of these and the value we're creating a lot of value by exporting. And that demand we're losing behind tariff walls in third countries. But we're also losing it inside the EU because of unfair competition, which we can see on, you know, from different clean technologies as well. So how do we make sure that the single market, our 18 trillion, can actually absorb some of the shock and some of the markets that we are losing outside? The obvious thing is to work on the single market itself, because there are today still many barriers that make it difficult for supply to meet demand in Europe. By the way, 83% of our demand is actually served by supply made in Europe and value created in Europe. But we can do more to shock absorb. So one of the work streams is actually to remove these barriers in the single market. And we've identified the terrible 10. The 10 most stupid types of barriers that member states invent permanently. There are also 3 that we invent at the EU level, so just to reassure you, and we have to work to get them off. What we've established is a kind of grid, the terrible 10 broken down into 30 smaller parts, and then we've mapped them across the 27 member states. We hope that that kind of picture will help member states to actually get moving and removing them. And these barriers, they're not, some of them, but most of them are not illegal, they're just stupid. They do take away the scale that we could use in the single market. And then I will come to a couple of other measures you already mentioned later. But zooming in now, I want to zoom in on 3 numbers. The first one is 77,000 kilometers. My second number is 300 million euro. And my third number is a couple of thousand tons. First number, 77,000 kilometers. That's our coastline. And that's our coastline that divides our continent from our exclusive economic maritime zone, and which is almost 5 times as big as our continent, our landmass. What are we doing to actually manage the assets, manage the security in this maritime zone? Not too much. And if we want it, I mean, we have wind parks, we create our energy there. 80% of our communication is via undersea cables in these zones. We don't have the equipment to actually manage that in a good way. We don't have the underwater drones to control the cables. We don't have cable repairers. We don't have kind of the capacity today to maintain in a good way robotic unmanned ships, the wind parks. So that's a case for investment. And we're coming with our maritime industrial strategy combined with a port strategy to actually make sure that we can have this equipment and we can actually manage that zone in a good way as part of our economy. And there is risky stuff in there. For example, unmanned underwater drones. Do they function or not? Investors will not be happy to or will ask questions. So what we need to do is to help you invest in these technologies and to help develop these technologies, which we do via our research programs, but we also need to scale them. And then we need to build them, which is a question of, you know, where do I build them? Because our ports, can we extend our ports? So all these questions will be raised, but essentially it's a question of investment. How do we want to invest, scale our capability to build that type of vessel in Europe? There's also a second question. These vessels which connect us all, 40,000 vessels actually serve Europe around the 77,000 kilometers coastline. Where do we buy them? You know, if one day we can't buy them anymore, we can't actually trade anymore. So looking at that as well, there is a need to invest in propulsion in these vessels. A lot of them are very old. A lot of them have not the modern propulsion. I commend IFO for investing in methanol. So we need investment in all this area, and what we're doing with the Industrial Maritime Strategy in February is actually to give the frame and then have our financial tools, InvestEU or others, to help de-risk this and leverage also your financing in it. My second number is 300 million. We have in InvestEU 300 million to help companies actually be active in Ukraine. Be active in Ukraine to repair, be active in Ukraine to produce, and be active in Ukraine to build components and trade relations on space. Your banks, when you're a company, will say, "Are you crazy? I'm not financing you in a war area." And with the InvestEU guarantee, these 300 million, we've enabled such type of business in Ukraine. And there will be more of it, because we need to rebuild Ukraine. In December, we'll come with a construction strategy. A big part of this construction strategy will be about modular building, which means you don't build on site everything, but you ship or you move bigger modular pieces off-site than to where you want to build. This is going to be, it's a specialty that we do in Europe, but we have to scale it big time, and we need the logistics then as well to ship it in the case of a reconstruction of Ukraine. There will be a lot of investment needed, and investment in Europe to scale this modular building, aligning it with needs also on the reconstruction, and using the money that we will use for reconstruction then the moment comes to actually put this together in Ukraine, or even already today. My third number is a couple of thousand tons. This is the magnets we need. China just announced that they would not deliver magnets to Europe anymore. We take something like 90% of our magnets from China. Actually, we ship our old magnets to China, and in the new export regime, these magnets would no longer be shipped back to Europe. Now there's a kind of alleviation, at least for a year, with time, but it's not sustainable to be so dependent on magnets from China. A number of our, I mean, the most exposed industries, car industry, wind industry, aeronautics industry, essentially, and a bit machinery industry. So we need to build our own resilience here, and that's via diversification. Diversification means, for example, recycling. We have 3 companies recycling magnets in Europe, but they don't have a business case because the industry says, well, I buy the cheap ones from China. And this is where we will need to build the business case and accompany it. And that's, again, where investment is needed. And maybe from the public side, with our guarantee instruments, we can kind of absorb where supply does not totally meet demand. But when it comes to the scaling possibilities, if the single market works, we have enough to scale, and we have enough magnets actually in the cycle already in Europe that we could recycle. It's also about diversification, working with Australia, working with Brazil on the raw material side, because it's the rare earth, it's the extraction and refining, it's the metallification, and then the production of the magnet. So we need to have the whole supply chain. But investment will only flow into this if there's a business case at the end and there's the offtake. So these are 3 numbers that show to you how important it is actually to pull together and use the scale of the single market to solve a problem, to make sure that our economy is not dependent and that we can actually use our potential to thrive. Because only if you are strong as an economy, you are also sitting at the table. And that's to show you the focus where our industrial policy will go, but also where our de-risking policy with our EU budget will go. You already mentioned the European Competitiveness Fund. What we want to do here is, 1, to create critical mass, to pull together 451 billion euro, not in, I don't know, dozens of separate programs with the woes that many of you maybe or your clients have known in applying for these funds, but in one critical mass. We think that by leveraging these 451 billion, we could get to 2 trillion investment for the things, and they were chosen, you know, anecdotically, the 3 numbers I told you, to finance. Then, second point on the Competitiveness Fund, we have a strategic focus. We have identified 4 areas where Europe needs to transform, the digital green, where Europe needs to build its own resilience, raw materials, defense, and health, for example. And that's where we want to focus, because there is an alignment between public interest, public good, and business case from the private side. Third point on the Competitiveness Fund, which is also new, is the full mobilization of a full toolbox. It's grants, it's equity, it's quasi-equity, venture debt, and it's actually also support for the market. You remember what I said about the magnet, when supply and demand do not totally meet at the beginning, that we would have kind of this contract for difference formula. And of course, guarantees. Today, we don't have all of these intervention possibilities, and some are in one program, some are not available under another program, and so it's fragmented. Here, there's a single toolbox, and the single toolbox also means we can accompany innovation really from the beginning when nobody believes in you and you need a grant, to when you have a patent, let's say, you have a collateral, private money can come in, but we still need an equity anchor, and to the further scaling up to the market. And the fourth special thing about this competitiveness fund is use and user-centric. We want to make sure that as a company, as a strategic partner, as a bank, we know you. Once you're in, we know you. No matter what type of instrument you are then requiring to work with, we know you. We also want to limit the reporting time, and we want to limit, obviously, the time to a decision when you know I can have the money or not. This is part of the discussion we have with the member states, because member states say, yeah, but your commission, member states also have to play a role. So depending on how much role you play, this will probably, our latest KPI will be kind of adjusted. So that's the competitiveness fund. And then when it comes to the framework conditions that you already mentioned as well, it's really about making it easier for these investments. I mentioned the terrible 10, but I want to highlight one other point, which came already with the magnets. You need offtake. If there's no offtake, you can put a lot of money into supply. It doesn't serve a purpose. So we want to work on the offtake as well, which is public procurement, 14% of our GDP. That's meaningful. Why does it only have to be procurement? Couldn't it be public investment at the same time? So public procurement, lead markets, green steel, green cement. You may have seen we're supporting with the Innovation Fund. We just published 60 projects, of which a lot is green cement, but then you need offtake of green cement. If you think that who's building most construction, it's the public sector, then you see how all of it can come together to actually create a market and a scale. Because if everybody uses the same standard for green cement, then you actually, as a cement producers, you have scale here. We're also looking at Made in Europe, and there was a declaration of 17 industry ministers or economic ministers yesterday about using that criterion, Made in Europe, as well, for resilience purposes. We don't want to be dependent, and also to be able to have, at all time, be able to provide certain services and elements in our economy. We're also looking at FDI. Should there be certain conditions in certain sectors, strategic sectors, that value is created in Europe rather than somewhere else? So we're really looking at this demand piece, and it's rather out of the box thinking, and that all of this is to create the business case between supply and demand in Europe, with value created in Europe, being able to absorb some of the markets we've lost. I mean, we're also opening trade agreements, but also some of the markets we've lost, and to create our resilience, and it's particularly true health and raw materials. So, in conclusion, in 2025, and you mentioned some of the Danish industries that pledged to invest more in Europe. Unfortunately, the trend is that our companies invest less in Europe than they do somewhere else. And of course, they get interesting offers to invest somewhere else. So why is that? I mean, some say it's about hedging in this new geo-fragmented world. Okay. But a lot of them also say it's because we don't have such a single market. And where's my return? I can't see it because there are so many obstacles I have to run. What I want to project with my intervention today is that we are really committed to give companies a valid reason to invest in the EU. And we really want to join forces with you, because in the end, you will be helping us, and it's not public money that's going to turn it around. It's you and your clients. So we want to join forces with you to build that argument, and that's what the Finance Days is really about. Thank you.
So, we've had two speakers setting out the Danish perspective and the European Commission perspective. So here, as the European Commission representative in Denmark, so what can I say that will add something to that? I just would like to underline how aligned these two agendas are. Before the current European Commission came into, started its mandate late last year, the Danish authorities and ministries, when you talk to stakeholders and people in the ministries, etc., they already had some kind of ideas what were their priorities for the next commission. They set out, the Danish government set out kind of a position paper on priorities for the next commission. And then when President von der Leyen gave her political guidelines in Parliament last summer, you could basically have a bingo check with all the boxes of the Danish wishes. They were all there. And that continued later when the Danish presidency set up their priorities. Of course, between these two events, there was one external factor that changed a lot, with some changing geopolitical realities, new challenges coming from another direction that we'd had in the past, both relating to security, but also, of course, growth and trade. And in this context, the Danish presidency, of course, set out their priorities, and they were more or less one-on-one with the Commission priorities. And that relates both to what we should focus on and within those priority areas, how we should do it. So the priority areas clearly being different aspects of security and defense and different aspects of competitiveness. In competitiveness, there is a very strong focus from Denmark on simplification. Of course, with the different aspects of simplification, also things like permitting, things should just be faster and more simple. But that does not mean that we should go back on the actual policies. So, as was said, by both previous speakers, green transition is not an obstacle to growth. There are some voices in Europe, clearly, that say that it is, that there is this direct competition between a healthy economy and green transition. There is not. Green transition, from the Danish perspective and from the European Commission perspective, it's basically something that can promote growth because it's one of the industries that should kind of drive innovation. You have the green technologies, you have artificial intelligence, quantum technology, biotechnology. There are a number of different areas where, if you do it right, you can use the innovation in these sectors to drive growth. And so technology and innovation is another kind of joint priority of the European Commission and Denmark. And to promote this innovation, you need investments. And there are so many different priority areas, the ones I've just mentioned, and of course, defense industry as well being one key area where a lot of investments are needed, that public sector investments will be nowhere near enough, and therefore we must be smart in how we kind of mobilize the private investments. So, by creating these framework conditions, as has been said, and by de-risking in some way, that it's a tired phrase that has been used in different ways, but somehow using the public funds to mobilize the private ones. And the Copenhagen Competitive Summit that was mentioned before, which took place at the same day as the European Council in Copenhagen, was kind of this agreement between business and public sector that if you set the framework conditions right, we will come with the investments. And that is the kind of key thing, that there is the opportunity for a lot of investments in Europe if we get it right. Because things that are happening elsewhere, for instance, in the US, it's clear that they try to create framework conditions for investments as well. But at the same time, for long-term investments, changing the playing rules when you've already started is not a good way of attracting investment. So you look at what's happened to some of the investors in green technology in the US. It's creating a lot of question marks, and therefore a rules-based, clear, stable framework that we have in Europe is also something that will attract investments if you combine it with the right framework conditions. So what I hear from Danish stakeholders is basically one thing. Everything that is in the Commission's priorities, that is in the Danish priorities, is exactly spot on, but now we need to move from words to action. Thank you.
I think that was my cue, moving from words to action. So thank you for that. And I think it's very telling, of course, that the EU Finance Days here in Copenhagen during this presidency now has the heading EU Financing Competitiveness. Because competitiveness is really what we all are now looking into, how we can help the European companies regain the competitiveness, the competitive advantage that we have lost. But of course, competitiveness is not something new. The Commission, together with its financing partners like the EIB, the EIF, where I come from, the European Investment Fund, and other financing partners have had efforts for years through financial instruments that are using EU budget to leverage and to get the private financing and other also public sources of finance in. So this is something that we know already how to do it. We have the tools, but now we have to target them in a different way and in a simpler way than before. I want to talk a little bit more about the InvestEU, because the InvestEU has really enabled the European Investment Fund to, via the guarantees that we get from the Commission, has enabled us to roll out much more financing through loan portfolio guarantees, equity, securitization, that was mentioned also as one of the priorities of the Danish presidency, to how do we revive the securitization market in Europe as part of the Capital Market Union and the Savings and Investment Union. But also capacity building. We are working with financial institutions, with funds as well, to build their capacity to finance more and broader. And in Denmark, we have excellent partners, obviously. The IFO is not only our partner, but also our shareholder. And we are also working with commercial banks like Danske Bank, who are also represented here today. And on the fund sides, we have a number of funds, both funds that are here in Denmark that we work with. For instance, funds that are coming out of Denmark's Technical University. I visited one of them yesterday, and they're working with innovators from the Technical University who are just about to start businesses and help them. And by helping, by supporting these funds, we can help them help businesses in Europe. We don't finance directly, for those of you who are sitting thinking about becoming an entrepreneur, but we finance via these financial intermediaries. And we try to finance a number of verticals that are important for us. In the areas of tech, it's digital tech, clean tech, health tech, and so on. But also in the social area, we try to support microfinance institutions that can reach out to vulnerable groups that are otherwise have a very difficult time getting finance. And we know that InvestEU has been a very successful instrument to have this very broad reach out. It has had a clear added value. We have seen that also from the evaluations that have been done already by the Commission. It's crowding in the private investors. And at the same time, also, we see that it has been very flexible. It has been possible to make new innovations within this instrument. We have been able to target net zero industry technologies when that came out as a new policy priority, including the critical raw materials that Carsten was referring to. We have expanded our eligibility for the instrument. We have set up instruments with the export credit funds around Europe, including also IFO, by the way, to help companies in Europe, European companies, who want to help Ukraine by continuing trade with Ukrainian companies who otherwise had lost the possibility because export credit agencies found it too risky for very obvious reason to trade with the Ukraine, or to support trade with the Ukraine. So there has been a constant, let's say, creative development of this instrument, and it's going to continue into the next MFF. We're extremely happy about that the Commission has proposed InvestEU as a part of the Competitiveness Fund. So there are basically three things in the Commission's competitiveness agenda, the competitiveness compass, that are extremely important to us. The first one was the simplification omnibus for InvestEU, which has made it possible for us to stretch out the money, to use the guarantees better, to also use some of the reflows that came back. And we have to thank also the Danish Presidency for being able to broker an agreement between the Council, the Parliament, and the Commission on the Commission's proposal. It's gone through in record time, and now we are negotiating with the Commission the agreement to implement this extra capacity. And I think we should also live up to the speed with which it has come through the legislative procedure, and make sure that we get ready as quickly as possible for the implementation of this extra capacity. The second thing I wanted to underline in the Commission's competitiveness agenda is the Savings and Investment Union. I mean, there you could say the EIF, at the same time as being a sort of competitiveness tool for the Commission, it's also a capital market tool, because it's in our DNA to ensure that capital can flow easier cross-border, that an SME in Romania can benefit from a fund that is established in Italy, or that guarantees also can make these flows across border easier. And at the same time, we are also helping to crowd in, as I said, the private finance. We are setting up new instruments to do that. We have, under our TechEU umbrella, we have what we call the European Tech Champions Initiative, which is an initiative to focus on the big funds, the really big equity funds in Europe, because we see we're lagging behind. We have maybe a tenth of the big funds that exist in the US. And it's a bit like the old analogy I use is the old one of, you can teach a person, you can give a person a fish, or you can teach him how to fish. And we don't do direct investments, as I say, others do that, but we are making sure that the pond in which the companies can get the finance is expanded, and that we build up this whole ecosystem of funds around Europe of all sizes that are able to write out tickets to the companies when they need them in their scaling up journey that was also mentioned by Carsten. And the last thing I already mentioned is the proposal for the European Competitiveness Fund in the next MFF. We know that under InvestEU, the financing that has been mobilized is to some 70% private finance. So we continue this also into the next budgetary period. One wish that we would have is, of course, that it should be very easy under the future Competitiveness Fund to combine money that comes from sectoral programs because this will mean that we can potentially have a much bigger guarantee to leverage and to turn into benefits for the companies in Europe. So we would really wish that potentially already from the outset there would be agreements to have some of these transfers from the sectoral funds, or that at least it would be incentivized, that would already be written into the legislation. And the same for the member states, by the way, because we have had great success with pooling member states funds under the InvestEU, and if we could continue that in the future and even incentivize it even more for the member states, this could really bring together all these different sources of finance for maximum impact. Thanks a lot.
Thank you very much, opening speakers, Mrs. Tina Nielsen-Hertz, Merete Clausen, Kerstin Jorna, and of course, Stefan Wellin. This is the end of the opening speakers, and I would like to ask our Director General, Kerstin Jorna, to stay on the stage because she will be moderating now the panel discussion. The other three, please, you can now leave the stage, and we will make space for the other panelists. And if I may now call to the stage Peder Lundqvist, he's the Chief Executive Officer of IFO. We heard already a lot about IFO. Kristin Tuxen, she's Head of Direct Banking, Business Customers at Danske Bank. Welcome. Then Mr. Morten Høyer, Political Director at the Danish Industries. Welcome. Mrs. Sine Konan, Executive Director for European Affairs at Finance Denmark. And of course, Mr. Martin Prestegård, CEO of ATP Group. Thank you.
Thank you. Thank you, dear panelists, for joining us on the panel. Lots of things to chew. I just have to ask Ulla, do we shorten the panel? We go until 11 o'clock? That's what's the plan?
Yes, that would be lovely, if you can, yeah. Thank you.
So, we say everything only a bit faster. This panel is very much about how much public, how much private, and how do you align the two? And I think it was very clear in the interventions this morning already that we have to find a good way to actually work together and tie it all together to make the impact for investment in Europe. So in my first round, I would just like to do a kind of speed dating, ask you, but very shortly, who you are, what you do, and what's your angle for this panel. Start with you.
Yes, my name is Martin Prestegård. I'm the CEO of ATP. We are a mandatory pension company in Denmark. We invest globally, all kinds of assets, long-term investment mandate and liabilities to all Danish people. Strongly regulated from FSA and international regulation and EU regulation and also national regulation. So it's kind of our framework that we have to apply to all laws at the same time. And sometimes when people ask me to do something, invest in specific things, because it's a political need for that, I sometimes ask them which law do I have to follow and which law do I have to kind of not follow, because it's pretty sure that I have to go to prison either way what I do. So that's our everyday life as an investor.
So in short, tear down those regulations.
No, not. You just have to decide, what to do, to be clear about it. So because I'm a strong believer in regulation in many ways, and I think a lot of the things you're doing from the Commission is good, but it's also a bit confusing, and sometimes it's difficult to find out what to follow, basically.
Martin.
So I will ask some tough questions, because we can be very polite to each other and have a nice speech and nice time, but
I can reassure you I'm from Hamburg, so I can
I'm really looking forward to this. Morten Høyer from Danish Industry. I'm the political director. We are a business organization. We have different kinds of members, from small companies to the biggest companies in Denmark. from my perspective, of course, is what goes around business. What are the obstacles? Or what are possibilities? I think I'll stick to that.
Very good.
Signe Conan, Director EU and International Affairs in Finance Denmark, branch organization for banks and mortgage banks and asset managers. Spent a lot of my life in Brussels, have a Pandora's box of financial regulation to watch over, and there's a lot, and now you didn't want to say we want a little less regulation. I'm going to say we want a little less regulation, some better regulation, looking at level playing field for European banks and investors. I think that will be my key points, and then also talking about the possibilities for the Capital Markets Union going forward.
So if I summarize, it's less but smarter.
Yes, that would be great.
Okay. Christine.
Yeah, my name is Christine Tuxen, and I head up a large chunk of our corporate franchise at Danske. I have basically the responsibility for around 150,000 smaller businesses across the Nordics. And I basically have two purposes every day I go to work, and that is serving, well, at scale, the everyday entrepreneurs, the businesses that maybe are newly started, but also those that are just trying to run a good shop. But then something that we take extra pride in at Danske is also to serve those entrepreneurs who truly want to scale and which have the potential to do so. And that is not always an easy task for a bank. So we have really been practicing and trying to learn from the ecosystem. And I would really love to share how we are trying to play into that ecosystem from both debt financing point of view, but also from an equity perspective. But my focus is really on how can we lean more forward when it comes to bank lending. So looking forward to explore that in this panel.
Very good. We have this, we introduced the notion of ecosystem slightly different, but we organize our policy and our DG actually around the 14 industrial ecosystems that we have, because it's clear, one per one, you need policy in an ecosystem. And the biggest ecosystem is supply and demand, actually, to understand that, how it works. Peter.
Short intro. I represent IFO. We are the investment fund and business bank of the Danish society. We are owned by the state, but we work in the private sector and with the private sector. And our main objective is simply to leverage the capacity of the private sector to create value. In doing that, we are, of course, extremely specific, at least we hope to be extremely specific about the priorities we follow. So we send a clear signal about what we want to do and why we want to do it. That also means that there are things that we are not doing. We are not the garbage can of the private sector. We are a strategic partner of the private sector. And we try to be present in all the different areas of the capital structure. But of course, we pursue different objectives in the different parts. There's a huge difference between, let's say, structuring an SME loan and then doing a growth venture capital investment. These, I think, and you need to be very I think you need to be very clear about which objectives you are following. In particular, in this situation where we have lots of instruments and lots of objectives, I think the identification of the problem you're trying to solve is probably the most important part of your journey before entering into allocating the financial instruments. I think Martin said a little bit about the same. It's like, what do we expect people to do, and how are they following these objectives? I think this kind of problem definition will also be important when we discuss what to do going forward.
Maybe when you define this objective or this polar star, we've heard a lot about competitiveness being the polar star, and that's true, but it's a very broad notion. How do you do it in your bank? How do you identify, the topics you want to go for? Do you think in terms of risk, which is the risk nobody is taking, so we have to go into that? Or do you say, well, politically there's a bouquet of green digital resilience, we take one or all? How do you do this?
I like Marete's metaphor from before, like making the pond bigger. I think that's a very good way to go about it. I think the risk is that you take every transaction on a one-by-one basis. So you look at one transaction and say, how can we make this happen? Then you move on to the next, and then then you lose your strategic purpose. I strongly believe in creating a strategic opportunity for all investors. So we see ourselves in a role where we are primarily creating infrastructure and leverage. By doing that, we also have to make a decent return, because decent return means we can put more money on the balance sheet and be more active next year. But we are not a case-by-case institution. We are a structural, strategic partner, and we like to see ourselves as someone who makes the pond bigger, creating opportunities. And that, of course, also means that we have to make transactions, that we have to be in the different deals, but not necessarily on a case-by-case, but with a larger strategic objective.
Christine, do you fish in this pond?
What do you think?
Are you fishing in his pond?
Yeah,
Not enough.
No. I think, let me start in a slightly different place. I think the biggest problem for Denmark, for the Nordics, for Europe, is the fragmentation of financing. Because for any company across their life cycle, they will need a different mix of debt and equity, and that is a different continuum of risks. And banks are, at least in the classical part of banking that I represent, where we provide access to the bank's balance sheet, that inherently is at the lower end of the risk spectrum. And then and that's debt financing, right? And then there's the other end, the equity, the venture financing needs to step in over here. And for us, the challenge for each and every customer across their life cycle is to ensure that we can orchestrate our part to provide the right mix for this company. And for me, IFO, EIF, others, venture funds, as a supplement to what we do. So I don't think Peter and I are fishing in the same pond. We are together, hopefully making that pond bigger. And for me, that's the challenge we have as a commercial bank. That is to understand how can we be a multiplier to the good initiatives that are coming out of, for example, the EU. Now we are talking of the competitiveness fund. I actually think there's something that is already here, which I'm really sees a high I think is very promising, and that was what was actually came out last week, that IFO and Nova Holdings are partnering up with the Scale Up Europe Fund. And that is actually part of the sort of missing link in this whole, how can we make sure that companies have access to funding throughout this risk continuum. That is a part of solving that puzzle, because that is a fund that actually goes into exactly where Europe is losing out and missing out right now. It's that valley of death from the startup to the true scalers. We need to keep them in Europe so they don't go elsewhere, and you can guess where they're going, right? And I think the Scale Up Europe Fund is solving part of that puzzle and problem. So I really, back to your question, see that we are supplementing each other in this ecosystem. And it's a complex one.
And you think that the Scale Up Europe Fund will kind of take a space that nobody is filling because of its size, or because of
its size, but also of where it is focused. Because I see no lack of startups in the Nordics. I have been working with corporates throughout my professional career, 50 years plus now. And I have seen so many good ideas out there. And they start up their companies, but then never manage to scale. That is the challenge we all need to solve. And I think the Scale Up EU Fund is one part of solving that challenge. It's not the only one.
Sinne, when we were discussing also with banks, these often it's really about the return. Mm-hmm. How much is your activity driven by return rather than yours is driven by risk and finding a solution is?
But it is driven by return, and I think it's also still should be going ahead, even if we have a new world where, for strategic autonomy reasons, we have to pick out some valuable companies or sectors for Europe. I think we still need to make sure that when we make the investment decisions, or when banks step in, you really need to have a sort of still a market-based assessment of the product, of the company, because otherwise, that's going to end up with the next policy cycle because new politicians come in and they have other objectives, so that's not going to work. So I think there's still some core sort of characteristics that we need to keep. And in the whole financing discussion in Europe, I think it's really important to remember that Europe is still a bank-centric sort of financed environment. So it is hard to, look to the US, which has a completely different setup. So when we discuss with your colleagues in Brussels, this is one of the sort of main points that we need to make sure that also the European banking sector has a level playing field in these discussions with the American environment. And this is really tough discussions on very boring financial regulations, on capital requirements, tough decisions to be made, balancing out financial stability with competitiveness, really long and of course very serious discussions, but these are the discussions that we need to take. So we cannot just sit back and say we want all of that Draghi has pointed out, but we are not going to look at how the investors or the banks, asset managers, how they are regulated, because that's the other side of the coin, and that's what we are trying to have this conversation without starting a second financial crisis. And a lot of the people in politics, for good reasons, have a long memory. I also have a long memory, but we are in a different time. And you need to understand what the players in Europe are up against. And we're not going to change this bank-centric focus in the next 5 years where we need to up our competitiveness. So we need to be really clear about who has what roles. And then I also think that's a little sort of a hobby horse of mine. I think member states also need, when we are discussing capital market union, savings and investment union, there are also still things you can do at a national level. And I'm going to say the word in this country, taxes. We're not talking about what level of taxes, but if you are an investor in Spain and you want to invest in a small company in Finland, you are running into a couple of tax situations before you are, through with your investment. So, and I see that, the council is really good at taking tax off every time we discuss capital market union, but it's one of the areas that we also have to add to the list today to make the picture complete, if we want an integrated market in Europe.
Very true. I also have a long memory. What we discussed in 2008 and following is, the real economy and the finance world. So, Morten, do you see real economy and banking world meeting? Are there enough projects in Europe that are generated that could be absorbed or could be financed? Or is it more the banking thing that doesn't allow to finance? I mean, where do you see obstacles, if you see?
Well,
which
I think
side?
If we start out from a Danish perspective, I think we have quite a good system with the banks, with IFO, with private capital doing investments. So I wouldn't point to that as our major problem in Europe if we talk about a broader scale on competitiveness. If we ask our members what is the biggest obstacles to growth, they will say it's not taxes, it's not lack of loans, it's not environmental burdens, it's actually administrative burdens. 70% says that that's the main obstacle for growth. And I find that somewhat depressing and also a bit optimistic, because we can actually do something about it. It shouldn't be that difficult. Of course, there was the proposal about the CSRD that was in the European Parliament that was turned down. I think I cried a little bit that day because it shows something about something's not right in Europe. But nevertheless, it is a problem that we can do something about, and it shouldn't be that difficult. So both pessimistic and optimistic about it. So I think that's one of the main obstacles. So sorry for derailing the discussion about financing just a little bit, but it's not where we would like to point in what direction there are obstacles for growth. But also the single market. You just gave the best example. If you want to invest from Spain into Finland or something, there's just too many obstacles. You said it also in your presentation. So the single market as well is a big problem. Probably a lot more, but the administrative burdens, if we ask our members, it's absolutely the biggest obstacle.
Martin, I mean, you seem to have the money, but it doesn't trickle down to them. What in the overall regulatory framework, where you say you have contradicting signals, some say don't, others say do, where would you rebalance if you were in our shoes?
I would overall maybe just lower a little bit of the regulation, and then if you want to create certain movements in a strategic way, certain sectors you want to improve, or certain sectors you need to have some investment into, then I think all the instruments, IFO and the peers in Europe, they have, I think they are the right instruments. I think the scale-up fund, I think we have been talking about that, and I think it needs some private investor perspective in that way, that we need a return. So it's not our goal to have a strong Europe. It's not in my law or my retired people. It's we need a decent return, and then the other goals, they have to be like underpinned or supported by IFO or other institutions like that. So we need to have clear roles and clear responsibilities, and if you want us to do certain things, then you have to take some of the risk. So our risk-adjusted return is higher, basically. So that's for many things. It's very simple. So that would be my wish, that you would be clear about that. And then if you compare our disclosure rules, our sustainable finance rules, our prudent person rules, then sometimes it's a little bit difficult to find out what to follow. To try to simplify it a little bit. Then just to come down to the financing world and not the real economy. I think it's a problem for Europe that we don't have one or two big investment banks. They died with the financial crisis. We, as an investor, global investor, we cannot live without the American banks. We don't have a phone number in Europe that can solve our problems. So that's it. Another question we have that is a tough discussion for small countries like Denmark. We have different and many stock exchanges in Europe, and I think that's a good thing for Denmark. And I think if we closed down in Denmark and moved it away, then over time, it will, some of the headquarters, they will also move, to be honest. I think that's the way things works. For Europe, it might be better to have one or two stock exchanges. Just to have the operational setup to make trades in Madrid, in Milan, and so on, that's difficult. You need to be a big investor. So I think some of the tough discussions, also for Danish society, where we have to say, okay, maybe it's not good for Denmark, but maybe it's good for Europe, to make some of these tough discussions. Because as an investor, we think it's important to have a deep capital market, and it has to be liquid. And in some of these small stock exchanges, it's difficult. So I think the trend is, for a small country like Denmark, tough, because it's about this fragmentation of the capital market or the financing market is a challenge when you're up against US and China. So I think a lot of the good things in the saving unions and the investment unions, good things, fully support. But we have also to take the tough discussions, and it's just coming down to very basic things. We don't have a phone number to fix our problems. We need capital enough to scale up things. We can see that we sell our companies when they are at a certain, size, then if we have to find risk-willing capital, then we go to the US. And that's kind of the model of tech startups in Denmark and the Nordics. You reach, a certain amount of the size, then you go somewhere else, because the banks, they can't loan. You need equity, and there we need venture funds or other kinds of funds in a big size, and we need that, and we don't have a lot of them in Europe. So.
Sounds pretty much like squaring the circle, but we're very good at that in Europe. Christine, you wanted to come in?
Yeah, no, I very much concur to what you're saying, Martin, but I think one of the things we have been asking ourselves at Danske, that is, that there are a lot of things that we cannot really do a lot about, but there are also things that is decently within our own control sphere, and where we can actually try and learn about how we can play a role, and maybe, and that's the little positive story I just want to share here, we can also find some future fertile ground for getting actually the regulator to lean towards the sort of common purpose here. And it is no secret that for a bank, the first question I'm asked if I come with a good, I think, fantastic credit application, our credit department will be asking for, well, you don't have 5 years of earning history and a positive EBITDA that can pay back this loan. Where's the cash flow? That's the reality of being in the debt financing space, right? So we have really been asking ourselves, is there something else we can offer to these types of companies? And actually, there often is. Financial infrastructure, all companies needs an account, payments, cash management, FX, typically also currency exchange. But by venturing into this space, we also found out that there are actually some of these companies where we can spot the scale potential when we are close to them. We can see there's a venture capital who actually have done a due diligence and dare to put some money on the table. And we are so fortunate that we have both a CEO and a board that actually really put on the long-term glasses here and look at our customers in a life cycle perspective. And that means that we have actually in Danske been able to set aside 2 billion Danish kroner for a little part of my team to actually, outside the normal appetite of a bank, take risk with quality scale-ups. And when we combine that with the guarantee schemes that IFA represents, the ones that Merete represents from the EIF, we can put together structures where we can actually offer an attractive and relevant combination of debt and equity financing. For me, that is really something where we have also had to learn as a bank. I might actually be able to do something, even if I don't have 5 years of credit history. And this has led actually to a very fertile discussion with the Danish FSA on when we are to register very technically forbearance on a company, and then we need to set aside, write off the loan up front. They have actually been forward-leaning and granted us, with very good, a few years of knowledge sharing on this, more leeway to actually do something here. So it's slightly lighter regulation. And I am not worried about the financial stability of the Danish banking system for that reason, that's for sure. So I actually think that sometimes it works out when you dig where you stand and try to learn.
Rather than phoning the US, the telephone number. I mean, this is what we are also want to try, based on the experience we have with InvestEU, but also with the European Competitiveness Fund, is not just money and tools, it's also a way to have these conversations, really, between the public and the private.
But it's also culture, to be honest. It is a cultural thing in Europe that, and I think you see it with these kind of growth venture investments. We're excellent in Europe at taking on the right risks at the earlier and smaller stages of a venture investment. And we do enough investments so we can build portfolio, and thereby we can manage the risk with a portfolio approach. When it comes into the big stages, the growth stages, there we don't dare to take the same risks. That means we make less investments. That means we cannot build a portfolio. That means we cannot manage the risk. It is a cultural thing. We are more afraid of failing than we are seeking to win. And that's the difference culturally today, in my view, between the US and Europe, because we have enough skills, we have enough money, we have more regulation. We need to look at that honestly without pointing fingers at anyone, but there is too much. The CSRD is a complete nightmare, to be real about that. And I will never go beyond 500 people in my organization, so I can avoid it. Until they change the rules, I'll go beyond. Until then, I'll keep it below 500. That's just the way it is, because it's a complete nightmare. And we can risk share. So I think if we dare, if we become a bit more courageous, if we take on a bit about this kind of Ukrainian approach to life, having a real sense of urgency, then I think we're actually in a good spot. And then, honestly, we have an excellent cooperation, for example, with Danske Bank, but the biggest banking partner of IFO is Banco Santander. They are brilliant in every sense of the word. They are global. But of course, we also call the Americans. I think we need to do both, but this kind of always going to the Americans, that's part of the problem. But for many in the market, when they arrive at a certain stage in their value creation, it's simply too attractive to go to the Americans, and in some cases, it's the only place where they can get what they need. And I think that's the problem in Europe, to be honest. It's a bit like stepping up where we can, and we can do it, but culturally we need to go back a bit and then work a bit with ourselves, and then see maybe this can become football, where like out of the 10 best teams in the world, 6 or 7 are Europeans. It's nice.
I mean, Merete and I, we have the experience of that you can change culture, because in previous lives we worked together on making InvestEU happen, using a public budget as a guarantee rather than giving out grants. And people said, are you crazy? This was the Juncker Fund at the time, and we scaled it. Because once the idea was on the table, like what you say, it really reminded me of that, people start saying, it works. I want more of it. And that's how kind of we scaled InvestEU, and I would consider a European Competitiveness Fund as next level of that thinking. Also, because it brings together this kind of what you say, conversation between investors, companies, and regulators. We haven't had a kind of platform for aligning all of this before in that way. Because after 2008, we for sure regulated the sector, and not a bit. I still remember Mrs. Merkel saying, no actor, no territory, no activity will remain unregulated. That's what we managed. Yes. Okay. And then I would like to ask also if there's questions from the floor or Slido. I can't see, so but please.
It's not like that I disagree with Peter on the cultural thing, but I think Martin's comment about looking at structures within the EU, I think that's something maybe we should talk about a little bit more about that. Every time I get a memo about the financial union or something, it always says it has to be like it is in Denmark. And I think everybody else in a business organization in Europe gets the same memo. It has to be like in Poland, it has to be like in Italy, and we're getting nowhere. So we have to sacrifice something, and it's not like the way the EU functions. I'm still hurt about the CSRD vote. I'm sorry about that, but it's not like that you want to give away more power to Europe, but I think it's the only way if we want to win the battle against US and China. So we have to do more integration, and that could be also within finance, within investment. We have to bring down barriers, and we have to see that everything can't be in Copenhagen then. I think we have to make that sacrifice to get a better functioning Europe. And now we're talking about finance, but we have the same thing about energy, especially. Now we're building up a new way of using energy away from coal and gas towards something new, electricity, green hydrogen, and so on. And it needs a whole new grid through Europe. And it can't always be like it is in Denmark or as it is in Germany. We have to find some some common ground and say this is the way that we want to build, and then build up something in Europe that is better, that can make green transition in a competitive way. And I think we can do that, but we have to sacrifice something in every member state.
I would use the word sacrifice. I would use the word opportunity here. For example, I was at the inauguration of the last piece of pipeline for hydrogen between Denmark and Germany. Now, it's a total business case for Denmark because you produce the wind energy more than you can need, actually, the hydrogen that Germany needs. So it's a business case, and that we have to build. It's an opportunity. And one point in the debate with the legislator and the member states on the European Competitiveness Fund is that some countries in Europe say, well, we want our share of it. And we say, well, it's impossible, you know, it's risk-driven and project-driven to reserve a share. This was kind of, wouldn't work. However, where we can actually work is the project pipelines that are being generated. And it's true that Denmark, for example, is very great at generating project pipelines, but your knowledge could help actually in other countries to generate these projects and that pipeline that would flow through the European Competitiveness Fund as well. Are there any questions from the floor to challenge the panel? Yes, please. Can you say your name? So we know your angle.
Hi, yes, my name is Atle Sommer. I work at the Dutch Embassy in Copenhagen. Thank you for an excellent discussion. I wanted to talk more about the proposals put forward in the earlier panel as well, and would like to get especially your, Peter, and your, Martin's input on that, because that's something I work with a lot when I work directly with Dutch companies. It's what Costa said about public procurement as sort of a new financing tool. We see quite a bit of the new technological developments from Dutch companies lacking sort of getting into the market. And I want to hear, especially you, Martin, I could imagine quite a few of your members would be interested in having the public take a larger role in enabling new technologies. Could the EU and financing from the EU in terms of, for example, market credits or something like that, play a role in that? And for you, Peter, you just invested a lot of money in quantum technology. For that, there's a lack of business cases here. Could the public play a larger role in taking that up? It's something that one of the breakthrough technologies that the EU is also putting money towards. So I want to talk more about, well, what new sort of ideas and mechanisms can we try to innovate?
Thank you. Can we take another question, if there is? But you had two questions.
Morning, everyone. Thank you for a lovely presentation and panel. So just picking up you wanted to be challenged, and I'm always up for that. I'm from the Green Finance Institute, which is sort of philanthropically funded organization mobilizing private capital to the green transition. And everything you've said is exactly the challenge that we see. Hard to get scale finance in the Eurozone, really important not just for the climate, but for resilience and other reasons. And when I listen to all the wonderful work you do, and it's so heartening, it's great to know that so many great minds are behind this, it's sort of disconnected to the reality that we hear from the market. The people can't get scale finance. They can't access bank finance. IFO might be there, but they don't really fund that part of the journey. And there's this coordination lacking. Sort of no one is sort of the intermediary. Everyone is willing to sign a term sheet once it's been created and everyone is aligned, but there's just a sense of fragmentation. And so a challenge to me, like from me, excuse me, to you, is sort of, who is the coordinating actor? Who's making sure that this ecosystem is connected? I would love to be able to refer people to sort of whoever does that. Currently, we are trying with our small office to do that, and obviously, I'm sure there are better people positioned to do this. So just curious to know that. Thank you.
Thank you. So we had Martin and Peter. And then I think it's one of you maybe wants to reply.
Just to make sure that I understood the question right concerning public procurement and how we can use that to kind of scale up small innovative companies. I think it's a big problem. I think all in the small companies we are invested in, if they try to sell anything to the public sector in Europe, they are kind of, they don't succeed, basically. It's very difficult to sell, and it's very difficult to buy something if you are a ministry or something, because the public procurement rules are very strict and so on. So I think for our part, when we discuss with them, we basically tell them it's not a viable business strategy to rely on some public sector buying something fast from you. That's kind of the sad story about it. And I think it's a long discussion about how can the public sector use their procurement power and so on. But for small companies that needs money and need contracts fast to survive, I don't think it's a viable strategy right now. And it's sad, but it's true, I think.
I would like to make a commercial break here, because we just launched the consultation on the public procurement reform, Q2. We are planning to radically reform our public procurement system to move it to, meaningful investment tool. And we need your inputs on this, because we are going to go radical unless you say you want to keep it. So I close my commercial break.
And just concerning green investments and where we are right now, I think the market will experience that most investors like us, we are risk adverse right now in the green market, just to be totally honest. We have lost a lot of money because there was a hype in all green transition investments in 2020, 2021. The interest rates were very low and the market prices were very high. And when the interest rates increased a lot in 22, we lost a lot of money. And many investors will, including us, we will think 1 and 2 and 3 times before we invest. And I think that's the good reason why a lot of good projects, they are kind of stopping up and waiting for money. And we will see. It really demands, some advances in green transition, and you can see, for example, all the tube discussions and how to make green energy and green hydrogen and so on. It has basically stopped in many ways, and that's the sad story about it. Hopefully, it will start again, but most professional investors will be a little bit cautious.
And Peter, you had a question on quantum.
Yes, and just to make sure I understood it correctly, like the rationale behind us and the things we do in quantum, I think it's a reflection about what I said at the beginning about having a clear strategic choice. We have done relatively successfully a lot of investments during the 2010s in, I would say, normal digital solutions, software-based things. There's no need for an institution like ours to be extremely focused on that going forward. In our view, that's normal. That's normal business. At the same time, we have some very, very important strategic technologies that will define the future. AI is one of them, and that there we can have a whole session about discussing the application of AI. But quantum is a different one, an area where valuations and the technology hasn't completely gone through the roof yet, and where we have some strategic partners in our network, Novo Nordisk Foundation in particular, where we share values and we share missions. And then we have an ecosystem in Europe, in Munich, in Copenhagen, to some extent also in Paris, where we can, also in Paris, in Finland, where we can, also in Sweden actually, we just got a new CEO from Sweden over to run the company, our level 2 quantum computer. And there we think it's our role, mission, obligation to step in heavily and to do these kind of long-term structural investments where we are investing in value creation, but also in what I would call infrastructure for society that will allow us, hopefully, If we are patient enough to earn a good return, and you have to be really patient, but we are patient capital, but also allow us to provide infrastructure for society that will raise the overall level of competitiveness and mean that Europe will be in the forefront of this technological space, where we are also in a very fierce global competition. So we're trying to combine these roles and thereby using our ownership and the fact that we are patient capital to fill a role as an economic value-creating investor, but also as an actor of society. Sounds a bit like me playing the violin, but we think that we can combine the different things. And if I've burned all the money in 10 years' time, you can confront me.
I remember you for making the puns.
Yeah.
I'm waiting for the fish to come.
Yeah, exactly. Big fish.
Sine, you wanted to come in? And
yes,
then
I just wanted to react to your because I totally get that. Who is responsible for what? And do we have somewhere where we can knock on the door and there's a clever person sitting in there and say, now you need venture, now you need scale up, now you need a bank, now you go to Martin and get all of our pension funds in the very end. So, and it doesn't really exist. I've been working most of the past year on defense, where you have exactly the same question as you have on green. And trying to line up the dots, trying to find out, how are we going to do that? Trying to help a company who falls into the arms of the defense ministry, who has weird ways of doing contracts. And it's big and small problems out there. And that's why I think it's actually, just to get the discussion a little bit down to practical stuff, I think it's really good that you also have a focus on this EU Industrial Finance Forum. You need to create these ecosystems around the very big investments that we want to see on a European scale, where people actually meet and have the whole picture and the whole chain. So I understand the frustration, and I think every time we dive into another area, I've also been working on the whole green agenda, it is the same story. That it takes time to get these ducks lined up and for companies to see, what do I do now? Definitely.
But still, we don't want you necessarily always to phone in the US. So we are trying to build this now. Christine, you wanted to come in?
Yeah, I hear the question from down there being, dare I say, disillusion on the fragmentation that I think we have already discussed, but also maybe a little bit of disillusion on the whole green agenda. Where is it going? I think from our perspective at Danske, the green agenda is still very much alive, but there is just no getting around that the defense agenda is crowding it out attention-wise right now. I think that's obvious to everyone. I think there is a good learning in this, actually, from at least for us as a bank, because we are going where the good business cases are. I think with the green cases have maybe lacked a bit. I hate to say it, but maybe that is actually what we have needed, not necessarily more regulation, but, and here I speak a bit as the economist that I am deep inside, we need the right price incentives in terms of an emission tax that actually functions properly. That is much easier said than done, right? But for me, actually the defense agenda, I think that it holds the urgency, and there is money behind it. Mm-hmm. I cannot count the zeros here. No. So that is certainly something, where we are seeing business cases. There is a strong public buyer behind many of these companies. The offtake agreement is there almost by default in many of these defense companies. So we are very, very active in this space and also see a lot of good companies. I have to say that it is in Finland and Sweden that they are popping up, but it's also starting to come in Denmark. So for me, that's a wake-up call to when there's public money that actually is willing to buy and create the right incentives for the private sector, then things start to happen, and things are happening in the defense space. Yeah. So
totally and utterly, because there's also 800 billion public money until 2030 that's kind of available and is looking for supply chains to actually produce. Exactly. And there's also a crossover. I mean, on the AI, obviously, but a drone. How does a drone fly? Because it has a battery. So you also you need batteries, and you don't want to buy them in China or somewhere else. You want to be able to fly your own drones. So that's where it all comes together. And what I said in the beginning about the maritime industrial strategy is also part of it. We need to watch our cables. We need to have drones patrolling our cables.
And also going back to the maritime industry and the green, let's say the green agenda and the challenges there. The IMO debacle that we all witnessed from, it was a complete, that was even a significantly larger disaster than what we discussed as a disaster just some minutes ago. But we've decided to double down on that one, so we will definitely go into green ship fuels because now we need to do something serious to show that as Europeans we mean business. So you will see us entering that space aggressively within the next months, or at least within the next 12 months, because we need an answer to that kind of attitude.
We have 40,000 vessels serving our. I mean, it's our coasts as well.
Exactly, it is the future.
And clean. I mean, no emissions will be better for our coasts. Exactly. I'm afraid I can take one last question from Slido here. Sorry. Which is Europeans are afraid of failing, and this is why they do not take risks. How can we overcome this? Anyone with a quick answer to this?
Courageous leaders on the top that support the people when they are doing risks, and accept the fact that if you did take the risks for the right purposes, it's okay to fail every now and then.
I would also join the European project because this is sharing risk. You know, from its inception, Europe after the war, it's about working together and sharing risks and clearing when it comes to materials and all of this. I'm afraid we have to finish, so I'm going now to do something really unfriendly to you. My last question. I'm
out.
Yeah, no. Actually, the first one is for you. I will give you 2 words and spontaneously, immediately say which one you choose. Not long, but it's not so fair. So, Peter, public money, private money?
Private.
Christine, scale up or access to finance?
Or access to finance?
Broad, small?
Scale up.
Martin, supply measures, demand measures?
Supply measures.
Sine, carry or no carry? Because we have a lot of complaints that when the public moves into the space with funds and risk-taking, they don't ask for carry, whereas carry is your remuneration.
Carry.
Carry. And Martin, de-risking or deregulation?
De-risking.
Yeah, thank you.
Yeah. Sorry. No, Martin was supply. Sorry, I mixed. I did. Martin was supply or demand?
Yeah, actually, I'll say demand.
Demand. Okay.
we take it down.
Thank you very much. Please, a big applause for the panel.
Dear ladies and gentlemen, welcome back. Those of you here with us in the room, and of course also online participants following our web stream. I know you're even many more than us now here in the room, so welcome back. We had some technical glitches, but the beamer now works. We already have on the stage the 2 speakers from the Commission to lead you through the Synthetic presentation. My colleague Eike Klapper from the Commission, Director General for Internal Market, Industry, Entrepreneurship and SMEs, and Marlene Och. She's also from the Commission, from Sustainable Finance Unit at the Director General for Financial Stability, Financial Services and Capital Markets. Eike will start and Marlene will follow up. It's about sustainable finance, it's about InvestEU, it's about competitiveness fund. It's basically providing you a deep dive into the topics that you heard in the first part this morning. Now really with a technical explanation, and of course you can also ask questions. There is still Slido open, hashtag EUFD for the online participants, and for you in the room, of course, we will have a microphone that you can get. But yeah, not to lose any more moments, Eike and Marlene, the floor is yours.
Thank you so much, and also very much welcome from our side, and apologies for the technical difficulties, but now here we are. We just discussed what kind of pond we want to focus on in our discussion, because we heard a lot about ponds, but we'll just focus on our pond, which is the European Commission, and we want to give you a bit of insights what we're doing in Brussels. So it might be a scene setter, but this is really our report from Brussels, and we want to keep some time at the end for questions that you might have on anything that we do. So it's called Financing Competitiveness, as this whole event is. And I'm going to give you a bit of the context where we're coming from, and I'll hand over to Marlene, and she'll hand back to me. So as with everything, or with many things that we're doing currently, it has a source in the Draghi report, right? So everybody knows the Draghi report, and our response as the European Commission was the competitiveness compass. You see it on the screen. There's many different dimensions, but from a DG Grow perspective, I think the most important thing to mention is the Clean Industrial Deal. It's our business plan, and we heard a lot about business plans already this morning, to accelerate competitiveness, but at the same time also decarbonization for European industry. And the Clean Industrial Deal that we announced earlier this year already included the European Competitiveness Fund, of which I will talk about later on, which was then announced in early summer this year. But it also includes simplification. So you will have heard now many times the word omnibus. I don't know if anybody knows in Brussels where the word actually comes from, but that's what we do now, omnibuses. And this includes an omnibus on InvestEU, which I will talk about later on. But we'll start with all the other omnibuses that Marlene will talk about now.
Absolutely. Welcome also from my side. Indeed, I will talk a little bit about what we do in the EU when it comes to sustainable finance, specifically what we do in DG FISMA. So I will give you first a broad overview of the existing framework that we've developed on sustainable finance, and then some updates on the ongoing simplification in that realm. So let me first start with a broad overview of the different legislation and things that we've adopted roughly over the course of the last 5 years. We've been very busy. So first, there are a couple of legislation that focus primarily on disclosure. And some we've already touched upon, some we haven't talked about yet. So we have, of course, the Corporate Sustainability Reporting Directive, the CSRD, which requires large companies to disclose certain environmental, social, and governance information. Then we have the Sustainable Finance Disclosure Regulation, the SFDR, and that is focused on financial market participants and financial advisors. So here the focus is also for them to disclose certain information about their activities, but it primarily focuses on financial products and how to sort of identify what is green for the purpose of financial products, so that end investors can be offered financial funds that are green or sustainable to some degree. To then, of course, bring that to the end investor, we've also included sustainability preferences in existing legislation that focuses on bringing sort of connecting the markets to the end investors. So if you go to your bank and you say, I want to invest green, then they will have some guidance on how to advise you best on that. And then, of course, whenever a new a market blooms, as it's with ESG, new businesses rise around it, and so we no longer only have credit ratings, but we also have ESG rating agencies which rate a company's ESG performance, and these are quite fundamental for the markets. Hence, why the EU decided to also take a look at how they operate and ensure that there are some best practices followed by all of them. So these are mainly tools that focus on disclosure, so on providing sustainability information to the markets. Then we've also have specific tools that are, on the one hand, the European Green Bond Standards, which can be both corporate but also sovereign bonds that really are meant to be like a gold standard for what is green when you want to issue a bond. Denmark's actually the first country to issue such sovereign bonds under this framework. And then we also have climate benchmarks, which are indexes that track a certain level of, or like compile companies that follow a certain performance. We have the Paris-aligned benchmarks and the transition benchmarks, so two following green objectives. And then, last but not least, there's also the EU taxonomy, which to some degree is a disclosure framework, but it also really focuses on identifying, first and foremost, what is green for the purpose of sustainable investments.
So this is a broad overview of what is out there. I will go into a little bit more detail on some of these, and then I will focus on what we are changing about it and why. And you are very welcome to ask more detailed questions afterwards if you have any, because I'm going over a lot of very technical things in a short amount of time. So, sorry, you cannot properly see that anymore, but we have here the CSRD, the taxonomy, and the SFDR. So the focus here is on large companies, which on the one hand report in alignment with the CSRD. So here the focus is really on just putting the information out there, disclosing information, but not really measuring it in a way or like putting it into context. It's just putting the information out there. Then the EU taxonomy is rather a way to identify a particular green standard, so to say. So the logic here is, are we good on technicalities? Yes, fine from my side. I hope fine for you too. So it's a classification system. So we talked earlier about green steel, green cement. Who defines what that is? Can a company just go out there and say, oh, we produce green steel? Like, how can investors be sure that what they're investing in is truly sustainable? That is the idea of the EU taxonomy, to define a threshold of sustainability, to create confidence in the market for these types of very important sectors and activities where we need a lot of capital. And then, of course, to match the information from the companies, these high standards, and then the actual finance world, they can then indeed be like sold through the SFDR framework. So through, for example, sustainable funds, where on the product level, you can have funds that have different levels of sustainability ambition, linking the information that we get from the companies on both the CSRD and the taxonomy to then the financial market participants, to ultimately the end investors. So what is changing in that regard? So we already heard about omnibuses. The first omnibus, for simplification omnibus, targeted in particular the CSRD and to some degree also an aspect of the taxonomy. I'll give you a little bit more updates on what we've actually proposed to change in that regard. But those are the two aspects of this framework that were tackled by this first omnibus in February of this year. And then we are on top of that also reviewing other legislation. So the SFDR and also specific aspects of the taxonomy. So what we've already reviewed is the way that companies disclose this information. And what we are now looking at is the actual technical details on how do we define what counts as sustainable or not. So we have different environmental objectives under which we have a number of activities and a number of thresholds, and we are updating these as well. So to go a little bit into more detail on the updates on the taxonomy in particular, as I mentioned, we, together with the Omnibus package in February, already published a review of these disclosures delegated acts, and this one has now been published and it's currently under scrutiny with the Parliament and the Council. That means unless they object, this will come into force in the beginning of next year. And that will mean that it will be much, much easier for companies to report on their taxonomy alignment. We've significantly simplified sort of the templates, the data disclosure points that focus on this. We've introduced materiality thresholds, meaning that if something is not material to a business, you don't have to go into the nitty-gritty of the reporting, and so on. Then on the climate and environmental delegated acts, that is an ongoing review that I'm part of. So we are revising and updating the existing criteria in order to align them with both technical changes, but also with policy changes, and under the overall objective of improving the usability. So where sometimes we lost ourselves a little bit in technical difficulties, we are trying to make them as user-friendly as possible and linking to already existing standards and legislation as much as possible. And then the taxonomy is kind of a growing, evolving tool. So here we also have a technical expert group, the Platform on Sustainable Finance, that is continuously working on growing the taxonomy, on expanding the activities that are covered by it, so that more businesses can use the taxonomy, that more businesses and more business activities are covered under it. And so they will develop additional criteria over the next few years. And now let me quickly touch upon the CSRD, as already mentioned earlier. So what have we done from the Commission side? These are the main elements that we propose in the Omnibus to change. So the first one is called the Stop the Clock. That means that we no longer phase in additional companies into this legislation, because initially the idea was that it first targets really large companies, and then in waves, more and more companies become part of the framework. We've put that on hold for now. Then the idea is to limit the scope to make it like only applicable to truly large companies. From the Commission side, the proposal is companies with over 1,000 employees, and there's also turnover thresholds linked to that. This is currently with the co-legislators, so we will have to see what they make of this. But this is our proposal. Then we've also introduced a value chain cap. That means that if your company falls below this, you shouldn't be caught by some sort of trickle-down effect, meaning that then the large companies come and still ask you all that information anyways, but that there's a limit on the information that the smaller companies can be asked from larger companies in their supply chain, for example, so that they also only have a certain amount of information that they need to provide. We limited the audit requirements to limited assurance only, and also, and that is probably the part that is at the core for many people, the specific actual technical details. We heard about like reports of hundreds of pages and so on. So these reporting standards, we are proposing to significantly reduce the amount of data points and significantly reduce the complexity that comes with this reporting. And then finally, to give you a bit of the state of play of where we started earlier this year to where we are, and you can see we've been very busy, and so have also the co-legislators. So in February, we proposed this omnibus proposal, this package. In April, the Council and the Parliament already adopted this stop the clock part, so meaning that they no longer phase in additional companies. That was quite a time-sensitive thing, as it needed to be done by the end of this year. Then in June, the Council already adopted its negotiating position on this legislative package. In July, the Commission adopted a number of additional guidelines and helps. So we have some changes to the ESRS that immediately needed to take place, and also already some guidance for companies using the so-called VSME standards. And then also, as I mentioned, that's the moment where we finalized the changes to the taxonomy delegated acts. So then in October, the committee that is responsible for this in the European Parliament adopted its position, but as we already heard, then later that month in the European Parliament's plenary, they could not agree on this proposal for now, so they will have to come to another vote, probably at some point this month. And also equally at the end of this month is the deadline for the body that sort of reviews these technical guidelines to deliver these simplified guidelines back to the Commission, for the Commission to then rework and issue a simplified framework. So with that, I will hand back over, and if you have further questions on these, I'm happy to hear them afterwards. Thank you.
Thanks a lot, Marlene, and we'll come to two more topics. I'm aware of the time, but we're talking about financing competitiveness, and I'll present a short-term fix, so to say, and a long-term fix. So the short-term fix is kind of staying with the omnibuses. We have an omnibus about InvestEU. Just to remind you what InvestEU is, you heard it this morning. It's a fund that supports private and public investment, and it has has a number of different guarantee products. The one I would like to mention specifically is on sustainability, because our next panel will talk about this product and how it's done in the real world. So say it supports green and climate-friendly investments, and it targets specifically SMEs. But generally, InvestEU has been a real success project for us. We originally had 26.2 billion euros as a budget guarantee, and it's implemented by the EIB group. As of April this year, these 26 billion guarantee turned into more than 300 billion of investments. So this is a success story, and you heard my Director General mention it before. We are learning from this success story, and we're implementing it in the European Competitiveness Fund. So the omnibus, which is already passed, which was already agreed, thanks also to the Danish Presidency, as you heard before, in record time, We'll actually increase this guarantee by another 2.9 billion, so there's more money for these investments. It will drive our 4 key EU priorities: competitiveness, innovation, decarbonization, and social investment. But at the same time, we're streamlining reporting, so we're saving businesses, again, money in rolling this out. And we're expanding the advisory hub, something that you have heard before. We don't only need the money, we need also people that help implementing these funds. So this is a quick overview on the InvestEU Omnibus. It will come into place at the end of this year, so this is really a short-term fix, to say. But now European Competitiveness Fund was mentioned a lot today, and I'll mention it before. We published our proposal in June this year, and the reason is that we want to try to bridge all those gaps that you have heard in the panel. So our impact assessment has shown that we do not provide large-scale seamless funding support at this moment in Europe. We're not sufficiently flexible, we're not sufficiently linked, and there's an investment and financing gap. I mean, you've heard of the value of death, was mentioned as well in the panel, when we come from a startup to scale up. So these are the lessons that we learned, and that's why we're proposing the ECF. Also, we're proposing because InvestEU has been a resounding success and changed the mentality of the culture of investing already once in Europe. Kirsty mentioned the budget. We're planning on 450 billion euros, and we're optimistic that we can leverage those to 2 trillion euros in investment. The main features of the ECF are now on the screen. So scale, you mentioned it before, 2 trillion in the end leveraged. The impact, we want to have one financial toolbox that will help investors or help companies to get the right help they need at the time. It's supposed to be a seamless investment journey. Right now, you have a situation where a company is looking for money to start or to scale up, but it's always, most of the time, it's a one-off. You know, you get the financing to do one thing, and then someone will tell you, come back when you found the next step. And so we need somebody to be there at the first moment and also see the end game. So we want to be there the whole process. We want one single rule book. So right now, you have different forms of financial help in Europe with different rule books. Policy coherence, another point very important, that we align with what are our priorities in industrial research policies, and agility. I think something that in the world as we see now is more important than ever, to react to trends, that we don't have programs that are fixed over years, but that we have the flexibility to, as I said, react. This is a bit of the structure of this is the structure of the ECF. I think I would just want to point out that on the left you see so I see on the left the investment journey, which I just described, but then on the other, and under the house, we have the 4 main categories that also were mentioned by Kerstin this morning: clean transition, health and biotech, digital leadership, and resilient security. These are the 4 work programs that the ECF is going to focus on. A single rule book, a colleague mentioned, as you can see, one ring to rule them all, but I thought that's a bit negative. But you can see that we really think of the single rule book as a whole, for the whole process, right? It's about resources, it's about governance, it's about coordination. You heard Made in Europe this morning, so about EU preference. It's how do we deal with third countries. But this rule book should be the same for any financing we will do under the ECF. This is actually my favorite ECF slide because it shows the options that we will have once we have the ECF. It's a toolbox, right? So we're not only talking grants and loans, but we're talking public procurement, which we have heard this morning. We're talking production ramp-up actions, which is OPEX, which is something that we have not done so far in Europe. We're talking about single market value chains, remembering that what we heard this morning, it's hard for me to invest from Spain to Finland, so how do we build those single market value chains? We bring all the different financial instruments that you see on the right side of this slide. So that was a quick run through of the ECF, and then as a last slide, a promotional slide from our side. We often have the situation in Europe where companies don't know where to go to for their money, so we created the Access to Finance portal, where you can see the link on the slide, where you can go to your member state, and even in the bigger member states, also to a region, and click on what kind of finance you need, and you will see all the institutions, intermediaries that are there in that region that can help you find financing. We keep it updated. It's not easy to keep an overview, but that's our job. That's what we want to do as a service provider. to help you, help your companies, help banks, but help everybody involved to see where they can find the financing. So I think we're a bit over time, but if there are any questions in the room, I don't see any on Slido, feel free.
No pertinent questions here? Okay. let's take your question.
Hi, my name is Vikas Qureshi. I'm from Nordic Data Vault. I wanted to ask you, because in your toolbox you mentioned that the guarantee is also supporting the startups and scale-ups. So in terms of startups, does the guarantee covers the equity investment or purely a loan sort of a guarantee? Because most of the startups cannot acquire loans from the banks, right? So how do you come in and support that kind of investments?
I think that's exactly the idea that I don't remember who said it. I think it was also Kirsten this morning who said it, that it's about the you, it's about that specific startup. So we want to be there and understand that startup and bring in the knowledge and understand what is your need as a startup at that point. So is it equity, is it a loan, is it a grant, or is it something else? Is it, we heard from the Danish colleagues that when they actually talk to the companies, that they realize, well, they actually need, I don't know, a different form of support in that situation. So definitely yes, but I think the focus is, although this is my favorite slide with the toolbox because it shows what we have, I think the focus is on the investment journey, right? That we're there at the start and then we can follow with you through the investment journey. Or, I mean, also we will join you later on your investment journey, but the idea is to be comprehensive, to have a view of the whole life cycle.
Just to complement, if you can put the previous slide that Eike has there with the Access to Finance portal, basically there your startups can check on this website if they are looking for that type of finance, which banks in Denmark are basically working with the EIF on our behalf. And if that startup is looking more for equity type of finance, they can check which funds would be here in Denmark already working or investing through the EIF. I don't see any more questions, so really thank you now to Eike and Marlene for a very detailed presentation, but of course they stay in the room, so if there would be any more questions later on, you can of course approach them. And especially when Eike had that slide on InvestEU and InvestEU Sustainability Guarantee, now we are coming to a deep dive into InvestEU Sustainability Guarantee with speakers first from the EIF, explaining how the InvestEU Sustainability Guarantee works in practice, then followed by the EIB colleague explaining how the InvestEU-backed advisory by the EIB works, and then we will have two speakers from Denmark basically showcasing how this is really implementing on the ground. And the first two speakers will be Diana Petrascu from the European Investment Fund. I would like to welcome Diana on the stage, and thank you Eike and Marlene again. And the second speaker who will join Diana on the stage, it's Michael Holm Olesen, who will actually explain how IFAS, the main implementing partner of the InvestEU in Denmark, is implementing what Diana will introduce. So the floor is yours, Diana and Michael.
Thank you.
And we are, as said, deep dive into InvestEU Sustainability Guarantee first. Thank you.
Thank you so much. Good afternoon, ladies and gentlemen, and to the people online. As I was introduced, my name is Diana Petrascu. I work in the European Investment Fund. I'm heading the Sustainable Finance Unit, and basically we are the unit that was designing the Sustainability Guarantee and will design the future products. Just in a nutshell about the EIF investment approach, you heard Merete in the morning. She was saying that the EIF, the European Investment Fund, is never investing directly. We have an indirect business model, so basically we have the guarantees that then we channel through our financial intermediaries, being the banks or the financial institutions when it comes to the guarantee side, or the funds, the equity funds when it comes to equity. And here you can see the overall architecture of the InvestEU that the EIF is offering, so the full product line that the EIF is offering. So when it comes to sustainability on the guarantee side, we have sustainability guarantee. And then on the equity side, we have the climate and environmental solutions and the infra fund. But to deep dive on the sustainability guarantee, so just to also to say some numbers, we have 140 guarantee agreements signed to date with 133 financial intermediaries. We have all of these will generate around 9 billion of total financing enabled, and we are covering already 27 countries, including multi-country transactions. Just to stop a bit on the local specificities, so in Denmark, we have signed with 9 financial intermediaries. 6 are local financial intermediaries and 3 are multi-country. I also encourage you to check the website that was presented before on the access to finance, because there is where you find the most up-to-date information with the financial intermediaries that are offering the product. We also have on our website, but I think the access to finance one is much more interactive. So what is the guarantee? What is the sustainability guarantee? So it's our flagship product that we developed under InvestEU to contribute to the green and sustainable enterprises and investments. It's our first guarantee of this kind. It was launched together with InvestEU in 2022. What we do, like with all the other guarantee products, we provide counter guarantees or guarantees to banks, national promotional banks and institutions, to alternative lenders, that in turn will need to lend to SMEs, small mid-caps, housing associations and private individuals into certain eligibility, so into certain sustainable enterprises or green investments. There are criteria that were designed under the sustainability guarantee, and these cover either the sustainable enterprise or the green investment. On the sustainable enterprise side, basically we're not looking at the asset that is financed, but we're looking at the company type. So it's either that you have registered green intellectual property right, or you have eco-label products, or you are a green business by the revenues that you're generating. Or we can look at the use of proceeds, so basically what is going to be financed, and these are the green investments. So we have the energy efficiency, renewables. Here we cover quite a wide range, and I think the next slide is much better to exemplify, because the idea and what we wanted to do with the sustainability guarantee is to take the taxonomy principles and to try to apply proportionality principles, because we're talking about small companies, and define criteria that would be adapted to their needs. So you will see here that the green investments, they cover all of the taxonomy pillars, and not only, we go beyond, for example, when it comes to agriculture. So we are looking at climate change mitigation, adaptation, the transition to circular economy, pollution prevention and control, protection of water and biodiversity, and agriculture. And this is the, if you want, the substantial contribution area, so the positive criteria. But then, of course, we knew that we'll need to look also on the negative side, if you want, on the do not significant harm principles. And here, under InvestEU, there's a technical guidance whereby there was a simplification made through the sustainability proofing requirements. So there are certain restrictions that are put in the contract with the financial intermediaries and then with the final recipients. There is an ESG questionnaire that all the financial institutions that we work with need to complete, so that we can see that they have in place ESG principles. And then, of course, we have exclusions and restrictions, restricted sectors to comply with Paris alignment. So in practice, who are the recipients, or what are the investments? Here you could see this is the overall portfolio that we currently have. We've seen so far that around 1.5 billion of loans were originated. So I was saying that we have the 9 billion envelope that was already signed, but of course there is, because the sustainability guarantee, and I guess we will find out more about from the colleague, but it takes some time to set up, it takes some time to start deploying. We've seen this with our FIs. And from the 1.5 billion, you can see that 36% of the portfolio represents sustainable enterprises, and 64% represent sustainable investments or green investments. And within the sustainable enterprise category, the most utilized one is the green revenues, but we're seeing quite an equal share between the prizes, the eco labels, the certified business. And then on the sustainable investment side, I guess there's no surprise there. Renewable energy and energy efficiency buildings are the vast majority. I guess it's the most, this is what the market is doing. But then we also have some zero and low emission mobility and circular economy transactions. I will not stay long here because my colleague Emily afterwards will talk about the capacity building, but we've done a lot. I mean, the sustainability guarantee was the most helped, if you want, a product that we ever had. So we have the advisory services that we provided a lot of guidance, a lot of tools. We have a help desk, we have e-learning, webinars. So we did a lot of promotion and a lot of help to the FI so that they can understand what this is really about. The first one was the group green checker, is now called, the previous sustainability guarantee tool. Now we have one group green checker, so it's for the full EIB group. And it's helpful for the assessment of the criteria of climate impact estimations and the transposition of the criteria from the use case document, so it's a much more user-friendly tool. Then we launched in autumn last year, and it's quite successful. We get a lot of questions, and we're trying to address them all on the Green Gateway help desk. So the FIs that already signed with us, they can register in the help desk, and there they will get tailor-made answers. So they come, even if they want to send us the technical documentation, they can do so, and then we answer whether would it be eligible or not. And the most recent one is the e-learning platform that we launched. And I think with this, I'll pass on. Thank you.
Thank you. Excellent. Yes. Well, let me talk about some of the more practical things about doing work with the EIF and the sustainability guarantee. I do this in the position of a senior business developer here at IFO. Let's see, IFO, well, as we talked about before, IFO is actually a merger of 3 different funds. It's Vækstfonden, which was an NPI here in Denmark, then the EKF, which is an ECA, and then there is Denmark's Green Investment Fund. So on the top of this, we were kind of in the middle of a merger when we were trying to implement this sustainability guarantee. On the other hand, we did have a lot of experience in terms of the sustainability, given that all of the different funds that merged together were actually doing green financing. So on the one hand, we were struggling with complexity in terms of merging. On the other hand, we did have some experience already. So the purpose, as already indicated here, is to make the world greener. But let me just state here that it's making the world greener in a profitable way. So it's not soft money as such. But that's also to show that you can actually do that. That's kind of us. If we then also look at what the trends were what kind of market were we looking into? Well, some of the trends here in Denmark were that energy and CO2 taxation is going up. There are regulations, so there's a need for doing a green transition that is felt by most SMEs. 96% of all SMEs here in Denmark state that they're actually working with green transition. So I mean, there should be a need for this. The SMEs are also stating that they are still facing trouble with financing, and they are facing technological in maturity. So even though they're trying, it's still difficult. That's very good, because then you actually have the guarantee coming in and helping us as a national promotion institute to actually fund these companies on their journey towards green transition. So one thing that we also see here in Denmark, and that goes back to that this might be some crowding out of the green transition in terms of the defense. We have seen a significant drop in terms of venture capital investments here in sustainable businesses in Denmark. Second half here in 2025 looks better, but still there's a need for financing within the green transition. One problem that we talked, or one solution that we talked about before, is that the European pensions holds a lot of money. But if you, those in the back really can't see what part of the trend, what the kind of money is going to venture capital, well, that's 1.02% of all capital. So there is still a need for much more funding. That's kind of the market and who we were. So let's look at more like practical details in terms of implementation. First of all, the green area is a very large and complex area. I think we all know that. We talked about it before and touched upon it before. And it gives you a sense that perhaps you should be a technical engineer, an environmental engineer, or at least some technical skills within this area, because it is so broad. So much of our work in terms of implementation was actually to try and take out some of the uncertainties in terms of how should I master all this? How can I go about as an employee in a financial institution? I'm not an engineer. Do I dare actually to start to work with this guarantee? That is kind of the main frame. We're really trying to kill in complexity before complexity kills growth. If the users don't dare to use the guarantee, I mean, if my colleagues don't dare to use it, then it doesn't matter at all. Then we can sign as many agreements with the EIF as we want to. We still need to use it in everyday life. So we need to try to go about and give my colleagues a sense of yes, you can attitude, because it is complex all in all. And I think perhaps we managed to. I would say that our inclusions ideally should have been higher, but nevertheless, I think we're on the right track. Let me try to show you what we did. First of all, this is kind of the timeline for the guarantee that we took. We were, due to the ones we were in terms of the green aspects, we were invited into a market testing process by the EIF. Thank you for that. Otherwise, the rest of the applications process goes pretty as they usually do. I've been working with the EIF for the last 15 years, so that's kind of the standard timelines. What might be special is that it took us a bit longer this time to do the internal work to set up the guarantee. And I think it probably goes back to the complexity of green transition. So we did use a bit more time since the agreement was signed until we had already a package for our colleagues here at IFO. So what do you need to go through? Well, first of all, you need to put up a legal documentation. Then we put up some internal check schemes in order to make it easy. Put those online on our internet. We also made a product leaflet and so on to try to explain what this is, what is a sustainability guarantee in a very easy way. Then, of course, you also need to do some IT adaptations. It doesn't sound funny, but you still have to do it. There will be reporting later on, so you have to kind of collect data in order to do it. And then, of course, we did some training internally in IFO again. In the end, you do what you always do. You try to market yourself to the market and then see what happens from there on. If we look into what we call the internal product leaflet, we were actually, and that's the one on the right side, we were actually trying to bring down complexity from a 163 pages agreement with the EIF going down to around 9 pages. So as a colleague in IFO, you would have to kind of read those 9 pages, and ideally that would give you a sense of it's not that dangerous, I can actually do this, and then you start using it. We also did what you could call a check scheme, and that's the top one up there. And if you're able to cross out these 10 things you are supposed to do, well, then you are actually on the right track. Then you should actually be able to include a guarantee in the sustainability guarantee. And again, building confidence in our employees and giving them the actual will and capacity to use it in everyday life. So again, making it as easy as we could. Then we also had to involve the customer itself. Of course, there is a documentation package, as I said before, and that one goes back to the customer. We'll have to sign it. This one is totaling 14 pages. It comprises of everything that the EIF would like you to have the customer sign, and provisions and so on. And we do it next to our normal loan agreement from IFO. So as an SME or whatever company you would be, you will receive those two documents, a loan agreement from IFO and this site letter, and then you'll be signing it. That kind of takes the legal side of it. And then, of course, as Diana also told, we also used those tools that were available to us. And thank you very much for making them digital. That's a great step forward. I can't show you the EIB group green checker here, but it's actually very practical, very low key. Simply shows you what to do, what's requirements, and whether or not you think you are green enough to be eligible. Then you could always ask, did it matter at all? Well, the answer is yes. These are some 3 examples of companies that we actually financed together with the EIF. I just took some of those just to make it more a bit practical. Flowering is actually just a retail store, sells flowers. Nothing complex about that. That was still admissible because it had a lower CO2 footprint. Then we have the 2 other companies that are more kind of scientific, technological companies. One is actually, as written, trying to reduce emissions from the cattle industry, which gives the opportunity of still enjoying a beef in the future, which I would prefer. And the other one is the green hydrogen, which is using a AI-driven platform in order to use the customer's batteries to stabilize the energy market itself. So these are 3 companies that just shows the broad of it, the span of it, where you can go from retailing to PhDs in a laboratory. Very, very broad guarantee, which is also very, very practical indeed. And then, of course, we are in kind of this season. So I would like to also use this opportunity to give some inputs to the colleagues in the room here from the EIB and the EIF and so on, and put up a small Christmas wish list. It may be naive, but we are not that old. We're only 3 years old, so please bear with us. One of them is simplification. I mean, the EIF agreement that we signed is 163 pages long. If you're having trouble sleeping, that might be a solution because it is rather complex. I asked our legal department, and they said they could probably cut away 1/3 of the agreement if you were to simplify it. So that's probably good. Again, it takes out complexity, which is the main key here. Then there's a unified guarantee product from the EIB group. I mean, that might be naive, but many of those companies that we were looking at were not submissible into the guarantee because it was small and mid-cap. I mean, SMEs and small mid-cap companies. So sometimes the companies were not admissible because they were too large. If we could do a combined product from the EIB and the EIF, then that would be great because then we didn't have to worry about the complexity in that. Then there's an increased digitalization of help and support tools. We already talked about that, and I think you did a lot of that already. And then there's the reporting. You have to report 3-4 times a year, quarterly, to the EIF. It may be a simple point I've said before, but please only report what is nice to know and not necessarily what is need to know. That also brings down complexity. And increased focus on simplification. Very important. We talked about it all day long, I feel, in terms of doing it as simple as we can. If you do it simple, people will use it. Otherwise, they will be reluctant to use it. And again, focus on increased flexibility. That's also good. We also talked about that one. And then the activation of the pension funds, coming back to that one. I mean, why is it that we use all our money funding US companies? Shouldn't we just try to use them here in Denmark as well? ATP mentioned that there might be some regulations and signaling in this, but I mean, as a pensioner, I would prefer to have my money spent in Europe. And then, of course, fast-track approval of known intermediaries, which goes back to the fact that since you've been working with the AEF for over 15 years, let's not start over at every single point when we apply for a new guarantee. Let's try to build on what we already have. Perhaps you could have some kind of fast-track approval if you trust us sufficiently. And then in the end, I would like to quote Winston Churchill, "He who dares wins." I think we also talked about it today. If Europe is to win, then we also need to embrace risk. We need to embrace failure sometime. Failure can learn, you can learn a lot from failure, perhaps not that much from success. So my wish and hope is that we actually dare to win in Europe. And we're not just going to leave it all to the Chinese and the Americans, but we actually try to do sustainability, build the new green industries here in Europe and create some jobs for you and I, well paid, and for our children as well. That's it. Thank you.
Michael, you really do dare with the presentation. I think you got us all. You're courageous and do dare, and I think you managed to get the key point that it's there, that Diana started, and you really explained it well, that sustainability guarantee, not just that it's there with InvestEU, it took some time, it took some years for everyone, but it's there and it works, and definitely it represents opportunities for the Danish businesses.
It does.
Meaning your wish list is quite long, but I must say that lots on the list, given that we're in the season. It's also what we would like, and when you referred even to the pension funds, that's also the discussions that we had a couple of weeks ago in Brussels exactly on this topic, so we are there. And you really complimented Diana's efforts at the EIF side, so it's really good to see this in practice. Are there any questions? Because this was a daring presentation, a bit of out of the box, so I dare you now to ask some questions if you have some. It's really the sustainability guarantee and how it works in practice. No questions? There is one on Slido? Yes? I don't have... Oh, there is one. Yeah, first. Okay, I'll give first the floor to you.
Thanks a lot. Hi, I'm Ingmar. I'm the CEO of Europe's leading sustainable finance think tank. I was just wondering, we are obsessing quite a bit with transition finance, actually. Now, the examples that you showed were plain traditional green finance, and I was just wondering, and also the companies that you showed were maybe also much more green finance, classical finance, rather than disruptive things in sectors that still need to go there, get there. Is there some reason for that? Is there some flaw? Is there still something that you will need to do to capture better the transition efforts in sectors that still need to get there?
I think it's also the focus of the presentation. So the presentation was focused on the sustainability guarantee, which is a debt product. So then you would, of course, this means that it's for the traditional, if you want, banks, it's a guarantee that will take risk from the balance sheet of the banks if they are willing to lend into certain areas. Now, except for this, we also have what I was showcasing at the beginning. So there is the climate and environmental solutions. This is basically it's a sustainability product that is designed for venture capital and private equity funds. So basically there we invest into venture capital or private equity funds that then they will invest into companies that have the green angle. And this can be also like mostly it's technology. It's like clean tech related and so on. The idea is that as for the guarantee, we only invest in the funds, and then the funds will need to go to invest into companies. That's the first thing. And the other thing is that we never invest alone. So we invest alongside private markets or private players. This means that, so generally I would say that the ticket size of the EIF into a venture capital fund is around 25%, and then the venture capital fund needs to attract also private players into the fund, and these are conditional commitments. So once that they manage to fundraise, then we also invest. I don't know if it addresses, but the presentation today was mostly on the debt side. So then it's not so much, you will not find that debt is not a product for this type of companies that you're specifying.
We have one more slide, a question that Julia will now read because she received this.
How do the InvestEU Sustainability Guarantee and Green Gateway services help SMEs in Denmark to bridge the gap to innovative green projects?
I mean, the Sustainability Guarantee is a very wide guarantee. It has a lot of criteria. It looks, as I was saying, it looks also at the type of enterprise, so not what you're financing, but the type of company. And here, for example, because we're talking about innovation, I would say, for example, companies that have patents or other intellectual property rights so that they registered such intellectual property right in the clean tech space, then this would be eligible regardless on what would be so we don't look at the type of financing. And then with regards to the Green Gateway, I mean, I will leave it also to Emily to explain what the Green Gateway is doing, but the idea is that it's really a support tool. First, with the tool, the green checker, but on the innovation side, I think if there are, and we've seen, even especially actually in the Nordics market, we've seen very innovative companies that were doing super nice projects in the green space, but they were, I mean, they're not fitted exactly within the criteria. And then through the help desk, we got the questions from the financial institutions, and then we were trying, I mean, especially because sometimes with innovation is that there are things that we didn't even think about. So of course the criteria need to be wide enough so that they can allow for this type of innovation. We cannot prescribe everything that will happen in the future, and then we always try to find an angle for these companies to be eligible under one or the other criteria.
Thank you, Diana, and Michael again for thinking out of the box and providing all the answers. We would like to thank you now, both of you. And the last two speakers I would like to call on the stage, Mr. and Mrs. Smith. They are not related, even though the topic that they will talk about is related. So Emily Smith, she is from the European Investment Bank. She will explain us the EIB advisory backed by the InvestEU, notably the Green Gateway. And Mr. Michael Smith, he's here representing Nordea, and he will explain us how Nordea is using the Green Gateway in practice here in Denmark. So please, the floor is yours.
Thank you, Ulla. Hi, so my name is Emily. I'm from the EIB's Financial Institutions Department, specifically looking after some of our advisory programs. So the colleagues in the earlier panel have done a great job of already explaining some of the advisory support that we provide, but I'll dig into it in a little bit more detail for you. So why did we create the Green Gateway? Well, we realised that there was a need to complement the financial part of the group's green financing offer with a package of advisory support to help banks navigate some of the complexities that we've spoken about already today and improve their capacity to do more in the area. I'll dig into what we have in the overall package for you. So as you can see, it's quite extensive. It's something that we've developed over the past 2 years. It's something that we're also still developing. So we're continually trying to think about what are the needs that are not being best addressed at the moment and take feedback as well from the banks to improve it. So it's very dynamic, but what we have at the moment is the group green checker. This is a free-to-use online web tool. It's been designed for banks, but it's also obviously freely available, so SMEs could also use it to assess whether projects are eligible for EIB group financing, and importantly also provides an estimate of the energy savings that will be generated by the potential project. We have bilateral advisory support, where we work, as the name would suggest, on a bilateral basis with banks to help them optimize their green financing products, so perhaps suggest some adjustments to best ensure that their products fit the market needs, the public funding environment in a given member state. We help to train them in terms of providing support to understand in more detail some of the eligibility requirements and the reporting requirements. And then on our travels through the various bilateral assignments, we have collected some sort of common knowledge needs, and to address those, we've developed a program of webinars, which I'll come on to. And then I think the colleagues also previously mentioned the help desk, which is basically an online Q&A platform for EIB group registered intermediaries to help them address their eligibility concerns. And then lastly, we have recently launched an e-learning program. So we realize that there's a limit to organising a webinar, there's a limit to organising a bilateral training with an individual bank. Some of these topics actually have a huge audience. It may be that bank staff are turning over, there are new starters and so on, or bank staff want to learn in their own pace, in their own environment. So we've launched the e-learning programme to address that need. So I mentioned the checker already. We do cover a lot of the investment measures at the moment, but it is a constantly growing tool. So we're constantly looking to expand new investment measures. We're about to launch a new adaptation investment sector to it. And then we're looking at new areas such as circular economy for next year. So if there isn't something there at the moment, if it's possible to put it in a digital tool, trust me, we are looking at whether or not we can do that and making that happen. The help desk we've spoken about, just a few more words. So that is resourced by a team of EIB group consultants and internal staff. So when a bank submits a query, it will be responded to, typically averaging in around 3.5 days in terms of the queries that we're getting answers back to. And then common questions are going on an FAQ library, and the help desk will help navigate you to those right answers. And then the e-learning platform I mentioned, the slide there addresses the topics that have already been launched. So we've got energy, buildings, manufacture, transport, and agriculture is out now. Green enterprises is coming soon. We think also that the e-learning platform could have value for the wider SME community. So at the moment, the e-learning platform is accessed on a registration basis, and it's to EIB group intermediaries. But we think there is value in exploring whether this could be open access, and we could develop some material and some courses for SMEs as a target group to raise greater awareness of the rationale and the benefits of taking forward some of these investment projects. That's something that we're looking into at the moment. The bilateral assignments that I mentioned, so we've carried out 43 of those so far. None so far in Denmark, so if there are any Danish banks in the room or online who would be interested in talking to us about accessing that specific service, we would be very happy to have that conversation. As I said, this is where we sit down with the bank, we work over a 3 to 9 month period, help you understand, if you need it, how to best position your green financing products in the market, how to navigate other public funding that may be interfering with some of the attractiveness, shall we say, of your products, and understand the group's eligibility and reporting requirements. And then finally, I mentioned the webinars earlier. So we've covered quite a few topics so far. We've had really good response to these. Interestingly, the taxonomy one, we were talking about complexity earlier, like 450 people signed up for the taxonomy webinar, which just shows, I think there's a huge demand for people to have more guidance and training on what all this means. So we're adding new webinars all the time. We have one coming up on adaptation, which we will try and do later this month, and then we will try and do one before the end of the year on power purchase agreements. That's another product that is being pushed under the Clean Industrial Deal, and then watch this space for what will come next year in Q1. They're also available on the EIB Group website if you want to have a look at them in more detail. So that was me, and then I'll pass to Mr. Smith, who will tell you what it was like for you as a recipient.
Yeah, thank you very much. And I'm here to give Nordea's perspective on the InvestEU Sustainability Guarantee. And I come from the business banking unit within Nordea, and we work with SMEs. And I'm a head of strategy, but I also have responsibility for our Sustainability Centre of Excellence unit within business banking. And I thought most of you, maybe on the video, don't really understand or know who Nordea are, so I thought I'd take you a bit about who Nordea are, and then move into how we have been working with implementing this, and maybe some feedback with a warm heart. So Nordea is the leading financial services provider in the Nordics. We are also the largest. We're the 22nd largest bank in Europe by assets and roughly 10th by market capitalization. But kind of most important for this conversation is that we are the trusted financial partner to over 500,000 SMEs across our 4 home markets. Nordea is also extremely committed to the climate transition. We have set a target to reduce our finance emissions to 0 by 2050, and an interim target to reduce it by 40 to 50% against our 2019 baseline. And we are tracking well on our way to achieving that. But we also are very keen and see it as part of what we do to support our customers through that transition. And we have enabled well over 200 billion euros of investment since 2022 into sustainable finance. And part of this has been a long partnership with the EIF, who help us create very attractive and useful financial products for our customers. But I thought it would be good to try and contrast some of the previous or the current guarantees to the sustainability guarantee, and what do we see in practice within Nordea. And there are some differences, and I think we've heard a lot today that there is a very steep learning curve around the sustainability guarantee, especially when we compare it to the implementation of the other EIF programs that we have done. And it has required training, and I think we really appreciate that training. But I also think of the customer, the end customer, because we aren't the end customer. So if it's that much training for us to understand this, imagine how much training and understanding it requires for an SME to work in this space. We see some differences around criteria, and I think specifically what I want to highlight is the impact criteria. So I guess in some of the other guarantee programs, it's relatively easy to understand the criteria or the entry criteria, but in the sustainability guarantee, we are asking our customers to assess the impact of their investment, not only what the investment is. And that has a knock-on effect on the last point. We can assess a lot of the eligibility criteria in some of the other programs through disclosures that businesses already make. So their financial statements, for example, is a classic one that we can do. But in the case of the sustainability guarantee, customers have to, especially in the sense of impact, provide additional data. And that data often is required of some sort of audit or some technical sign-off. And that comes at a cost and a burden to the SME. And I think when we really think of, in the smaller end of that, you start getting to a question of that fixed cost relative to the benefit from the loan gets quite narrow for the customer. So there is an admin effect and also a kind of cost-benefit effect. And we think this does have an impact with uptake. So we've only got our internal data to use here, but we've started to look at, comparing this to some of the other guarantees, and particularly in this case, the Innovation and Digitalization Guarantee, which was launched at exactly the same time. And we see 6.5 times more uptake of the Innovation and Digitalization Guarantee. And I think the other thing to note is that we see a difference in the type of customer. So 9 out of 10 customers who take up the Innovation and Digitalization Guarantee are micro and small companies, where for the Sustainability Guarantee, it's kind of 6 in 10. And we need to remember that small and micro SMEs make up 99% of all businesses that exist. So there is, we think, some of that overhead is playing into that. And then when we dive more into the sustainability guarantee, we see the usage mainly in the criterias that are, frankly, much easier to use and prove from the Nordea side as well. So with that, we thought we should come with some, I don't know if you want to call them recommendations, but maybe something that you would be willing to consider. And I think the starting point, like in Nordea, we always start very much with the customer. And we need to remember that, especially micro SMEs, they have 10 employees maximum. So very limited resource, limited expertise in this area. So we need to really focus on making it easier for those customers. I think something around the criteria has been well discussed, but also I think there is a frank case for banks that we are trying to digitalize and distribute via digital a lot more than we have in the past. So these programs have to work in that context, and we need to make sure that they can work in that context. I think the Green Gateway tool has been excellent, and we use that kind of extensively. But luckily I have the advantage of being an English speaker, but being in the Nordics, where English isn't the first language, the Green Gateway tool does show some complexity. So when you put solar in, for example, 7 routes appear, right? And which is the route to go down? And if you're looking for solar panel, you've got to figure out that it actually means a photovoltaic system, which is not language that we in the Nordics or the banks, or maybe especially for customers, really understand the difference between those two things. So I think there is something there where we could find some simplification. And I think taken together, and almost concluding on the whole day from what I've heard, is that there's just a real need to reduce complexity where we can, and for me, really focus on the end customer who is using this guarantee and making it as simple as possible for them to take the advantages of this scheme. Because we are committed at Nordea to the transition, to supporting our customers, and we see this as a tool that will help us do that more in the future. So we're always taking you up on your, we cover 4 markets which weren't on your map earlier, so I think we would be willing to talk to see how we could work together. So thank you.
Great.
Thank you very much, Mr. and Mrs. Smith. Are there any questions in the room for both of them? Not. I just wanted to say that, yeah, Michael, with your Christmas list, in addition to the other Michael's Christmas list, I thank you for this, and we are trying to work definitely on simplification with EIB, Emily's team, as well as with Diana's. And basically, the InvestEU Sustainability Guarantee was there to help SMEs not to have it excessive on them, because SMEs, as this should be the key message also of this event, they are not under the taxonomy, meaning we should really continue to shield them and to protect them. So your results that you had on the right-hand side of the screen of comparing the 2 guarantees that were basically launched at the same time, I think we would appreciate receiving this, also sharing with our FISMA colleagues, so that we have this for the way ahead, and notably on the VSME that was also mentioned earlier, that we keep this in mind when we work on these criteria. But thank you very much, both of you. You can stay here because we are almost to conclude. I will call Eike to share some of his concluding remarks and his observations.
Thank you, Ulla. And thank you, everyone. I'm very much aware that I'm the only one standing between you and a free lunch, at least for the people here in the room. So I'm going to make this quick. But I just really wanted to thank all of you to come here to participate online on behalf of all the Commission colleagues. For me personally, it was my first EU Finance Day, so this was really a great experience. And also, of course, thanks to our Danish hosts. I think we heard some visionary opening remarks this morning and then had a very engaging discussion afterwards, which I think we can all think about for a longer time. And now I think it was also very good to hear directly from the practitioners and the things that we can do better. So if I have to summarize what I'm taking back to Brussels, I think number 1 is that the analysis is there. I think we know what we're talking about. It's time to keep working and as the Commission, we're definitely doing that, but we need you. We need your input. We need your feedback. We need your Christmas wish lists. So really do engage. I mean, we're still around now for the lunch, but also did you always know where to find us? And second, maybe we need some more of that Danish optimism. I didn't know that this is actually a term, but to mix two messages that we heard today, maybe we shouldn't be so afraid of failing, but we should dare more to win. So I think that's something that we, from a European perspective, I think need as well. And finally, there's a sense of urgency. The Danish presidency has been showing that urgency in Brussels, I can tell you. We've been working really closely and hard with them, and I think that's something that we cannot stop doing. So I think, again, the analysis is there, but we have to be, the world is changing as we see it, and so we have to have a European response. And in that vein, with a sense of urgency, I'm going to hand back to Ulla to give us urgently where to go for lunch.
Yes, urgently. But before I tell you which floor it is, really big thank you also for the Commission colleagues from here, from the representation, who helped us organizing this event basically since June, and also EIB and EIF colleagues and their teams, because it has been a joint exercise. And of course, there is also Julia. She was our brain behind the whole event, and of course, the whole technical team. And now the tip where you need to go, those here in the room, it's one floor further up, so it's the third floor. Enjoy, whereas online participants, thank you very much for being with us. As mentioned in the intro part, all the presentations will be on the events website a couple of days after today. And the same is with the recording. And you will also get an email with the direct links to the website, etc. Thank you very much for being engaged, for being here with us, and see you next time.